on today's episode of Drinks and Mics, we're going to be discussing tax. Yes, so anytime I hear tax, I always reminds me of scissors.
What exactly is tax? Is it a gain that is 150 million and above, or 150 million and below, or is it the entire proceeds of 150 million?
No. Once the proceed is the trigger.
Yeah.
So once the proceed exceeds the 150 million, then you then have to evaluate whether again. Let me put it this way: if you're less than 150 million, nobody checks anything.
So who is a small company by this law? Who is the company that needs to worry about tax? Is it 25 million? Is it 100 million? I mean, CIT.
It's 100 million.
Some people are not expected to charge VAT anymore.
So if you're a small business, 100 million and below, you're not required to charge VAT.
Supermarket down the road probably does 30 million a year. So when I go there to buy bread, they're not meant to charge me VAT.
No.
When you sell a property, do you pay VAT?
VAT has an exemption list. And in that list, land and building is an exempt item.
And gifts are taxable, isn't it?
Are gifts taxable?
Gifts should not. No. I think there might be capital gains on some gifts,
on some gifts,
some
Yeah, so they're taxable.
Yeah.
Someone patronizes a sex worker and the sex worker gets paid.
Yeah.
And that money is taxable.
Hold on
now. It's an illegal activity taxable.
Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Oludayo, and of course we do this every week on this channel on Nairametrics TV. If you're not following, follow us on Nairametrics TV, hit the subscribe button, and guys, we want to see more comments. You know, we didn't see a lot of comments last week, and then it appears your comments are also very one-sided. I see you guys just comment on Tunji's.
There was love.
There
was love.
Remember, there's Arnold here, right? There's Otumba here.
There was love.
There's Sam. There are other interesting people. But you guys just is this his watch? Is this his shoes?
I don't know. I wear shoes.
What are you wearing
every day.
today?
Yeah.
Bangles.
Like I don't know what about him that is just making you guys, just. Anyways, on today's episode of Drinks and Mics, we're going to be discussing tax. Yes, so anytime I hear tax, I always reminds me of scissors. Like tax, we're going to be discussing tax today, and this is based on popular request. There's been so much about taxes in the last 6 to 7 months, I think, since they signed the tax reform, the different tax bills. Even though we really don't know which one it is now anyways. But, I mean, the acts now, or act as it is. So on this particular episode, we decide, you know what? We're going to talk to professionals. We don't, the different people on TV talking, but we just want to talk to, the pros themselves. And so that we can try and distill some of these, myths or rumors that, flying all over social media. So we got a special guest. Let me allow him to introduce himself, and then I will go to the gang next.
Okay, thanks, Ugo. My name is Oludayo Adeniji. I'm a partner with KPMG, focusing on M&A transactions, structuring, advisory. So advise a lot of clients, local clients, international clients, and also help you to navigate your tax concerns. So I think that's me in summary.
Nice to have you, Dayo.
Thank you.
Welcome.
And nice to be with the gang. I watched the show, and
cheers, man. Thanks.
I'm particularly impressed by the quality of discussions.
Who are you selling, though?
A sellish sell. Sellish sell.
Selling taxes.
I was justified last week by
I don't know why you guys are all anyways, I've got the show gang in the house, Otumba to the extreme right. What's up, man? How you doing?
Good.
You've been this is the first time I've seen you in town for 8 straight weeks.
Yeah.
It's not 8 weeks. It's not even 8 weeks, but
Yeah, almost.
What's going on now?
when you're balling, you're
Because
balling.
last time you were Lions and
tired now.
Tigers and all that.
I'm a changed man. It's a new year.
Between December and now.
beginnings.
It's just how many days?
It's good to know. Of course, to my left, who else? The one and only Sir Arnold Dublin Green.
Boom, 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 boom.
With a nice jacket today. Please close up on that jacket.
Yes,
Man, I
yes.
mean,
Hey, I mean,
I'm wearing it. Like, see this guy
sure.
just.
Give it to
Like, see this
Zoom.
guy just hammer.
Gold is at $5,200. What do you
And it's
expect?
Wednesday. I don't start buying gold at $2,000, man. So guys, that's 5K. So you can see.
I have to look like
Golden boy.
Yeah, you have sports glasses now. I mean, it changes them every week.
This is just a sign of old age. That's what it is, man. I took an eye test finally last month, and I just decided that.
Finally.
Yeah,
Yeah.
I've accepted my fate.
And of course, we got who else? You know, Mr. Show Off. He's got here. Mr. Tunji Andrews.
Ah.
What watch are you
On the
wearing
beat.
today, please?
Yeah,
He's
James
a
watches
watch.
every
No, it's not a
By the
watch,
way-
it's a Rolex.
He's hiding it,
It's
but
not
we
a
got
watch.
it. Camera
It's
will
not
catch
a
it.
watch,
We have new
it's a
cameras
Richard
now, so we
Mille.
can catch anything.
It's a Richard Mille.
Anywhere.
Because that's
Specially made.
That's how somebody, I don't know who it was, sent my number to somebody that, is a watch connoisseur. And like, oh, Tunji, I heard you like
You got the
watches.
one that
Oh, but yeah, thank you guys.
Tell them send you a watch now.
Yeah.
Be a brand
No, so
ambassador.
the I checked out their store. It's
too
not the
cheap.
kind of watch that people
It's too
can
cheap.
send. No, they can't send you that. You have
kind
to
of
go
one that
and
can pay rent, house rent.
yeah. So I understood. So I said, okay, I'll check it out. I'll
All
stop by
right.
the store.
Yeah. So, like I said, we're going to be discussing taxes today, and we're going to go right into it. There's been so many controversies, and I'm sure the gang also got a lot to talk about. I mean, we also have knowledge of some of these things, and so we would also chime in a few times. But it was important we brought Dio in as an expert in this field. So straight up, Dio, maybe let's even start with the acts. So there's this gist of the different, acts that were signed, or I think different. The one that was signed or the one that was passed is not the one that was gazetted and all that. So what's the story now? Is it? Do we
Where are
have
we?
like the official one now?
Okay. I know there's been a lot of controversies around the various versions and all that. And really what we have
It's for
now
chiefs.
is the version that has
Are you
been
chief?
passed by the National Assembly, which has been gazetted. And that's the version that is in use presently.
So the one
So
passed
one
by
has
the
been
National
passed
Assembly.
now.
No, it's been gazetted. No, it's always been passed. The president signed it. So this new version, you notice it has the president's signature.
Okay.
I know there are still some controversies by some members of the House, National Assembly saying, there were some alterations, but that controversy, I think the majority of the House and also the tax authorities, who are the administrators, have actually decided or determined that, look, the version that has now been passed by the National Assembly is the final version. And that's what is presently being administered.
Okay.
Obviously, we can't have different legislation,
Yeah,
pieces
exactly.
of legislation in circulation. So we had to. There might still be some legal implications, but as it is now, the version that has been implemented is the version that was passed by the National Assembly.
So both houses,
Yes.
Senate and House of
Yeah.
Rep.
The one that was passed in December.
Am I the only one that has this feeling about this new tax law that by the time I see my next paycheck, I'll just understand? So there's been so much back and forth. I'm like, you know what? Let me just see the paycheck.
Yeah.
We'll decide at that point.
But I mean, people have received salaries.
Because we've already seen it, right?
So that's
I'm
obvi-
seeing
that-
the
I mean,
VAT
that's the
receipts, I'm
obvious
seeing it
next
in
question.
pay
Yeah.
slips.
So this, because
Sorry,
this salary thing.
You get a pay slip in. Just get cash.
Or any other question from the previous one?
So actually on this
The rest
salary
of
thing,
us
so
have
I
seen
wanted
it
to
already.
I wanted to clear the air. So
Sorry.
I was
Thank you.
on Twitter this week and someone was saying, why is everybody dragging Taiwo? That Taiwo is the best thing that happened since sliced bread. That essentially they saw an uptick in their
pay.
pay.
Yeah, I saw that.
Right? That was
Yeah.
one tweet. But on the flip side is if you speak to Tunji, Arnold, right?
Yours
People
is
that
already-
You wanted to-
Right?
He was living on trust fund money.
So
like-
people that earn north of 25 million naira annually,
Yeah.
the number to expect right, that your income will be going down by your net income is about 5 to 6%. Is that an accurate number?
That's a very appropriate
ballpark,
estimate.
yeah.
Because we did an analysis, and I know that if your earnings is below, I think it's about 20 million, you would probably get an uplift because
Can we put this per month? So we just focus on take home per month. These are big boys. They look at annual.
So per month,
Yeah,
20
so
million is
that
like-
thing is confusing.
yes, per month will come to maybe if you earn
1.5. Because
Maybe
my own
about-
calculation was
Wait,
1.5.
so if you
about 1.4
So if you-
thereabouts.
if you
yeah,
earn
so below
1.4,
1.4.
Below, because even the first band on
Yeah.
800k,
Yeah,
you're paying no tax.
exactly.
That's zero.
Yeah.
And the next band, which is I think 1.6
So about 1.5.
or thereabouts. You know, the tax rate then goes up in a graduated.
What is it?
manner.
What is it? 1.5?
So if you earn 1.4 million and below, expect to pay less now compared to
Thereabout.
before.
Thereabout, yeah.
But if you earn 1.4 and above,
or above, no, above that threshold,
1.4, yeah, above that 1.4 threshold,
1.5,
expect to pay
slightly higher.
than
And as
what
your
you were
income
paying
then
before.
grows,
Yeah.
you know, you likely pay.
In fact, I think that from 5 million and above, I might be wrong.
5 million monthly.
5 million monthly and above, you're probably doing 20% flat. Ballpark.
Maybe,
Why-
yeah, thereabouts.
So at this point,
So
It's for the
it
big
favors
boys.
us to be collecting 1
So my
million
so my
naira.
so my worry
It's progressive. So as you earn more, you pay more. So essentially, the richer you are, the more you pay.
Yeah, so
you,
my
you then
salary is
contribute
now-
more.
HR, if you're
You
watching,
contribute
it's now
more.
1 million.
Yeah.
So can I ask around that? So there's a salary and there are other things, right? So let's say, for example, you have, as an investor, there are structures that I've put in place that also allows me to earn some sort of income, whether it's coupons, dividends. These things are paid at the source. WHT, withholding tax is paid at the source.
Withholding tax.
CGT is paid. There's talk of inflows into your account also getting taxed. I want to also, I also sort of want to.
Guys, go ahead.
Okay, let me
No, but
use
go on,
it.
go on.
Let me use it.
Since you've asked
Yeah,
already,
go on.
yeah.
So
go to that, yeah.
there are guys that have salaries as well as payments that come in.
Yeah.
Let's call it payments.
Yeah.
The conversation is, they'll go straight to your bank account and
No. Well.
so
Okay. Let me let you land. Sorry. I
the
apologize.
conversation they'll go straight to your
Don't
bank
worry, it's
account.
not a
and-
regulatory issue. You can ask.
I'm also being careful.
Okay.
Can you clarify that a little
Okay.
bit? Instead of me having to send money to someone and say loan repayments
Or say,
money's owed.
don't tax. This
There's a lot of talk around
Yeah.
description.
Transcorp paid dividends
Yeah,
today.
it's a myth.
So
Okay,
I
so-
don't know whether those
yeah.
dividends also
So
gonna
it's a
get
myth,
taxed.
right? And I think people are misrepresenting, the. And recently, I don't know if you've seen LRS's publication, where they've spoken about this.
LRS,
power-
that's Lagos State.
Lagos State Internal Revenue Service, where they've spoken about this power of substitution, as though if you have a tax application, they could potentially, get it from
From
other
your bank,
sources
yeah,
where
other
you have
sources.
other
Yeah,
sources.
yeah.
And I think that has caused a bit of consternation.
Uproar, yeah.
Uproar, yeah. So, but it's a myth, right? So for your investment income, what you likely find is that the withholding tax is the final tax, like dividends, for instance. Withholding tax is, because dividend is franked, withholding tax is the final tax that you have to pay on that. When you do your investments and you earn interest, you pay withholding tax.
Yeah.
Now, what would then happen is you should ordinarily then file your returns, right? At the end of the end of the year, to say, and if you're an employee, on a monthly basis, you pay tax on your employment income, but you should also declare income from other sources, right?
Okay.
Other sources might include rents, might include
Investments in
dividend.
stocks like the dividend
Yeah,
you
but
just
because you've already
collected.
paid,
That's what I'm saying, because I've
you've already paid
millions
tax
of
on that.
dividends.
Yes, so
Yeah, so
you then
you-
say, this is my income, but this is also the withholding tax that I've suffered there.
Okay.
Right? So there shouldn't be any additional taxes on most streams of income. For something like rent, there might still be additional taxes because withholding tax is not necessarily, it's an advance.
So how
income
does
tax.
it work with rents? Okay, as an institution, when
Yep.
if I'm paying back an investor, I pay X withholding, right? If I'm paying my rent to my landlord, do I pay him X withholding?
So
before we go
Do you understand what I'm trying to say? So that if
that topic is very controversial because again, I saw on Twitter is that certain landlords now are putting
that's what I'm asking. Yeah. So is it me that
withholding tax
pays?
on the contract?
Oh,
is
so
that-
what
that's what I'm
they're
asking. Is it me
what
that
they-
pays
what-
the extra
what they're
withholding, or
trying
is
to
it?
do is to say my rent is net 1 million.
Let's use a number. So let's say
Okay,
rent
let's
is
use-
1 million naira.
1 million.
And
naira.
I'm paying.
So you're
I'm paying.
paying rent 1 million.
Yeah.
What you should ordinarily do is
Is
to
remove.
withhold.
So
I'm
withhold
paying the
100k.
extra
So you
withholding.
pay
Or 50k, 5%, isn't
Yeah.
it? For individual. Is
for
that what it is?
individual.
Yeah.
I think
I don't know if they-
5 or 10. It's
Okay.
it's usually
let's
5 or
just
10.
use-
But let's say
use
10.
10%, yeah.
You pay 900k.
Mhm.
And the 100k, the 100k tax, you should remit remit that to Lagos State.
Mm.
And he will demand the evidence that you've remitted that.
Yeah.
So he should then use that evidence to
As
say
a credit
as a
note.
credit.
Yeah.
So when he then pays his tax, he then say, oh well,
It's
my-
already. It's already
so
been paid.
let's say you then determine his tax in a year to be say 500k. He's already paid 100k, so he has the 100k as a credit. So all he has to pay is the 400k balance.
So just to clarify.
But what some landlords are then, I assume what they'll seek to do is to try to then say, oh look, my rent is 1
Net of
million,
it.
then plus they
Yeah.
then try to do
Well, isn't that
But that's
essentially
wrong, right?
do like it's wrong.
That's wrong.
It's wrong.
Okay.
Why is it wrong though?
Because you pay the tax.
Yeah, because
as the payer, I'm paying you
Because
landlord, and I'm
No. The tax is on the bulk of the rent,
yeah.
not outside the rent.
So the guy has now just basically increased his rent. That's what it
no,
means.
no. He has not increased.
Well, he
That's
hasn't
what it
increased
is.
his rent.
Increased.
He has
if let's say
grossed
if you
up.
increase, you are still going to pay the same
trying to gross
percentage. What you
No, you understand.
What I
Understand.
don't may
Understand
have
what landlords are doing. This
So
is what
you're
I think they're
bearing
doing.
it.
You use it as a-
Exactly. So exactly. So what a
Yeah.
lot of the landlord is doing is that
He's just increasing.
you're bearing exactly. So and which is effectively an increase. So
Yeah.
instead of you to pay 1 million,
you now
you're
pay
paying
1.1
1.1 million, and the 100k you pay to you go and deal with the credit note.
But
I don't
the,
give a damn about
the
that.
tax is the withholding tax is no more 100k again now,
No, returning tax is a
because it's now
percentage.
1.10. If the
No. Understand?
uh,
The guy tells you that the rent
is 1 million
is
plus
1 million. Okay, I get your math.
Eh,
yeah,
now.
yeah. But they don't do the math like
it
that.
goes up,
Because
Yes.
who is the
Yeah.
question now is that who? So you've now increased it to 1.1.
Mhm.
You are being clever by half.
By half.
Yes.
You know. So, but the
Because
real-
tell the
tax
that
will then
1.1 is
increase.
111,000.
It's now
111,000.
100. So
Yeah.
what's the issue?
So that's my point. So the point is that the landlord doesn't care. And the interesting is that this is not a new thing. Because I remember in my
it's not
days of being an accountant, when you get all this LPO, finance.
You know, that's good. I saw
Yeah.
your recent release with one university. I didn't realize you're an accountant, by the way.
Yeah.
That's-
Chartered accountant.
But you
Yeah,
connect-
fellow
Anna,
actually.
Anna.
No,
Fellow, I can. Due respect to Anna, please. But I can, fellow chartered accountant. But the point is, I remember back then when you issue
an LPO.
LPO, then they basically just the guy just
gross up.
grosses it up. He doesn't care because the problem was always going after you for withholding tax credit note, and most companies can't get it because of issues with either the tax offices or whatever.
Yeah.
So they don't care about that. They just collect their full money. So isn't that going to happen again?
Well,
Is there anything that has improved
there-
now?
well, there
withholding tax
are
credit note
clauses
collection?
in the tax laws that actually doesn't support gross ups. So during so I know even it was introduced during the Finance Act, if you recall. There were some modifications that were made, and I believe there are similar provisions in this new act to say, gross ups are not allowed. So potentially, during a review, that could be flagged, and the tax authorities could potentially adjust the transaction. But that is not to say it doesn't happen. If you have a transaction and you say this is what you want net, so it's for the payer to then go back and determine what the tax will be and then account for the taxes. To the extent that the taxes are accounted for, you find that the tax authorities would more likely than not
So in a nutshell, then, Dario,
Yeah.
what the landlords are doing technically is not wrong, is it?
well
Because they're just pushing the burden to the tenants.
yeah, but
I mean, and we've seen this thing happen before with. I remember when Fashola signed that
The
rent
thing.
law and all that stuff, and
Tenancy law.
tenancy agreement or fees.
The
and
1 year
a
thing.
1 year thing. Landlord does it. Don't you define house, and then you see somebody that's willing to pay for it.
Yeah.
Bro.
2 years,
Especially
but
in
advance
Lagos,
3 years.
especially
Yeah.
in Lagos,
Yeah.
houses are
So
like
the rule of thumb now is if you live in Lekki Phase 1, a room is 5 to 7 million.
Mm.
Right, 1 bed. So if you have a 3-bed,
Like if it's on right or left.
which one I give a range, 5 to 8, 5 to 7.
Yeah.
million,
Depending on
right?
where.
If you're in Ikoyi, a room now is 10 to 15 million per room.
Wow.
Wow.
That's what the average
Wow.
rent
Wow.
is.
So the challenge really is that if you can pay 15 million per room, this is really the tax on top of it is not a lot of your issues. We're talking about a lot of people down the pyramid who the landlord now might not even remit this tax, by the way, but sees it as an opportunity to increase.
Yeah, that's what it
increase
is.
rent.
That's what it is. Yeah.
Yeah, so I mean, those risks exist because what you then find is the landlord.
But it's not the landlord.
Because
responsibility.
if- seeking to push the
so
tax to-
if I now withhold, right?
Yeah.
So what law allows me to say landlord has said you are supposed to pay 3 naira, and I said landlord, this is 2 naira 70 kobo. I've taken
And
this
Yeah, so
30 kobo. I'm
yeah.
going to give Lagos
Lagos
State.
State.
yeah.
Yeah.
So that was going to be my question.
get-
What's the official
Now-
practice?
If I know anything about landlords in
Lagos.
We're going to move on. But can you enter into court?
outside.
Can you
Hey, that's what I'm
Some
asking.
sort of
You want to go to
section,
court?
you know?
Who would
On
project
top of that matter.
Isn't that
How much is your rent? 400k. You want to go to court?
Yeah.
But I'm saying these are reasons why people will sell your property for free.
Yeah.
Right? They'll take you to court and they'll leave your property for 3-4
Eh,
years.
who know police?
Let's even leave that.
Don't be-
Let's even look at it from the perspective of you have now even done this. You know,
You've withheld, you've
withheld
remitted.
it, right? Who is going to protect you in the first place? Because the landlord can now start moving to eject you. Because there's no law saying he can't give you a quick notice. Whether based on this is not like labor law.
Mm.
This is tenancy agreement. You can't stay in my house by force, right? I can give you a quick notice. So what is there to protect me now? The only reason he's giving me quick notice is because I complied with the law of the land.
Yeah.
I am a good citizen, a responsible citizen, and then my landlord is victimizing me. Who do I now cry to in that instance?
Well, you have to go to the courts.
So Dario, so basically, the burden of, so just like you mentioned, as this is raging on social media, because here we're basically trying. Sorry about that. We're trying to basically bust myths, right? So in this one, the burden of deducting the tax and remitting is on the tenant.
Yeah,
Right or
because yeah,
Yeah, so that's the official. It's the tenant that
yeah, because the payout. So what the law
Yeah.
the law says when you pay, when you're making payments,
payments you withhold.
you withhold.
Yeah, yeah.
So
Yeah.
Yeah.
when making
Okay.
payments.
So there you have it.
Okay.
That myth is not busted. That's truth. If you're a tenant, it's your responsibility to withhold
Yeah.
and remit. But
After you have
you have to figure out how you
How you can withhold?
how you deal with landlord. So
when payment is made or credited, whichever comes first. Okay, uses the word credited. So
yeah.
essentially, when you're making payments,
Yeah.
So sorry.
So
I think I need to ask a lawyer about this. So imagine if I was supposed to pay 1 million and I sent 900k, and I say, Oga landlord, I have.
And then you even brought me with the credit notes. I gave him. And he tells you, we won't be calling
We tell this.
Yeah.
Then the landlord now sends you back the 900k. I say, I no rent house again.
But that's a contract breach then.
No, you send me money, I send them back to you. I didn't hold your money.
I just say I'm not doing it again.
I'm not doing it again.
So it's interesting though, but obviously the body's on you. So let's move to something else.
Before we jump off the salary one, I think this would interest a lot of people. So like Trump, right? Is the laws exist and there are ways where you can circumvent the law to suit, right?
Yeah.
So
Well,
one of
No. There's
we don't-
tax
we don't
avoidance. We don't
circumvent.
circumvent.
okay,
There's tax
I
avoid.
don't know the
Avoid.
language.
There's avoidance
Avoid-
and there's evasion.
No, avoid. I guess I always
Evasion
avoid.
is the
illegal.
one.
So avoid tax, right? So one of the things where this week a lot of salary earners are discussing is we should start making, and this is probably will make Tunji excited, is people should increase their voluntary
Contribution to pension.
right? So that they can reduce that tax burden,
Yeah.
right?
Yeah.
Going forward. Now, the thing is, it's two things. If I do a voluntary contribution, I can't access that money for the first 1 year. I can access it maybe on year 2, but I can only access 50%, right? But from where I sit, it will be a case of I'd rather put that money in my pension and maybe access it in 1 year than give it to the government because that's money lost. That's 100% disappeared. What would you say would be the right thing to do?
In terms
Or
of
the rational thing to do if you wanted to reduce your tax burden?
Well, to be honest, tax planning opportunities for individuals are quite limited in recent times because some of the loopholes that we used to have in the past have now been closed. So what you have now is just like the rent relief, which is really small, 500K or 500K is a cap, so that's nothing. But things that are still allowable, like the pension, which you've mentioned, life insurance premium, interest on mortgage. So if you have
When you say allowable deductibles, essentially.
yeah, it's like a relief. So essentially, you deduct it before your tax is calculated. So if we go the voluntary contribution route, which you've said it's allowable, so it means that if you earn $1 million, for instance, and you decide to contribute, say, 400K. So it means that 600K is what's available to be taxed.
Taxable.
And, you then have to then still include all the other reliefs that might be available to you. So you then find that what is then subject to tax is really small, it's minimal. And that potentially reduces your tax. However, in the Pension Act itself, and also there have been communications from the authorities also, you can't simply contribute to pension today and tomorrow go and collect it.
After a year.
So there are restrictions as to when you can withdraw tax-free, and also rules around withdrawal, the staggered manner, the frequency, and all that. So it's not because at some point I can't remember the year there were employees then that were contributing almost 99% of their income to pensions, yeah. And on month 1 and in month 2 they go withdraw tax-free.
Okay.
So obviously that was a very artificial. There are rules in the tax laws that allows tax authorities to adjust artificial transactions because you've just done that to simply avoid tax. It's not because
But that's not illegal though.
Isn't that evasion? Anyway, is it evasion?
Well, it's not
not
illegal.
because you've not broken any law.
Yeah.
So it's
Yeah.
avoidance. But it's not the only reason why you've done avoidance. You do avoidance to avoid tax, but the tax laws then saw through that.
So there wasn't any real
so that there wasn't a real
economic
substance
transaction
to that. So
there. It's just artificial.
they closed.
So bottom line then is that if you
Working
don't
with
want
Pencon
to pay tax, just whatever salary you earn every month, just contribute everything and just go with 70K.
Can I
70K, you will not be taxed.
no,
I mean,
so-
you know
so
70K
here's
as a
the thing.
minimum.
Can I ask a question? Sorry.
Yeah.
I'm trying to just connect something and see whether it'll work. So when I was a very young trader, there were some big boy traders. This was in England.
Yeah.
There were some big boy traders that were making some good money. So what they were able to do was become a consultant instead of being an employee of the firm, and then they were able to expense
a lot of their
certain things.
personal
They were
expenses.
Self-employed. Is that something that? I guess that's a decision on company level. But how is this something that could also work here if there's a high earner in a firm and they just decide?
Why are
to,
you pointing at me? I'm not one of them.
You know what I mean? So become a consultant and they're getting paid whatever it is gross, and then they can.
So rather than pay him as an employee,
you're
you
paying
pay
him as a business, as a provider
you
of
pay,
the service.
He's provided a service.
Yeah.
Potentially. So, but the question is that business. What is it? Is it a
An
company?
LLC? Is
it a company
business name?
or is it a business name?
Yeah.
If it's a business name,
He has.
you are the business. The business is you. Sole
Yeah.
proprietorship. As in, depending on the status of the business, that's what I mean.
Okay.
If it's a limited liability company,
Yeah.
then of course you also have to deal with all the things that come with having a limited liability company. You have to file your returns. You have to provide financial statements. You have to collect a tax clearance. You have to, but of course, it gives you the ability to. You have to pay VAT, by the way. Audit your financial statements.
So you're an
and
actual
all those
company
things.
now doing.
But of course, you
But what
can't.
if you're
But that gives you an
proprietorship?
ability to push your expenses. Yeah, you are the business is you. So at the end of the day, you
So what do you
have
expense out?
to you have business expenses.
So you can even expense
obviously,
your rent. You can
like,
expense as a business.
and now-
expense.
yeah, but
Office.
you have to. But I mean, that's going technical. You have to allocate, what portion relates to the business, what portion, is not the business, because
But everything can be the business in that sense, right? Because I am the business, so anything I spend.
so you will
As a
be
business
yeah, it
expense.
will give you the ability to expense,
Yeah.
a lot of those things, but there are
You
other
buy a new
things that you
phone,
have
it's
to.
equipment.
There are things
Equipment.
that
Make
there are
accountants
things,
great again. You see why we're great now?
There are
So you
guys are
got
back
so
in.
we're back in, man.
Yeah.
So you gotta come and we gotta explain this
So
stuff to
things
you
like
because it's not that
VAT.
simple.
Finally.
Yeah, but
Finally.
you would have to then also worry about things like VAT,
Yeah.
for instance, because obviously, even as an individual, so to the extent that
Someone
you're
as a sole
providing,
proprietor.
I mean, a sole proprietor,
Yeah.
to the extent that you're providing services, to the extent that those services are not exempt, there will be, VAT. So you
Yeah.
have to think of filing VAT returns.
Okay.
So it comes with its own.
So in this case,
nuances.
if he's working for maybe company A, so he resigns and turns to a consultant, is working for
Yeah.
company A. So company A does not do pay with him anymore. What do they call it?
No, because
withholding tax
from
what are they paying?
from a company perspective, we're dealing with a business.
A business.
No, that's so assuming he's a sole proprietorship business, maybe just a.
Yeah,
what
it's
do they
still a
call it?
consultant. It's
Yeah,
still a
yeah,
business. Not
yeah,
a-
it's a
So
business.
all the company will just deduct from him is withholding
withholding
tax,
tax.
isn't it?
Yeah.
All right, you got that, guys.
Yeah.
That's
So,
how
but,
it
and
works.
also, by the way,
But of course, there are also thresholds that you have to worry about. So
So is
businesses.
there like a minimum?
Okay, well, for those are for limited liability companies, because the law defines small company, and all those 100 million
Yeah.
threshold and all that.
Yeah. Okay.
Yeah.
All right, we got to move, guys. Let's go to this new tax ID thingy, right? There's also this gist around TIN and NIN linkages, where people are saying, with
link it to
your
your
TIN and your
BVN.
NIN now, you don't need tax ID anymore. You need NIN. What exactly does the law say here? So does it mean that if you have a company now, you don't need to bother going to look for NIN, TIN, or what exactly?
The thing is, every taxpayer needs to have an identification.
Okay.
So what has happened until now is that for companies, when you register with the tax authorities, they give you a tax identification number, TIN. For individuals, well, maybe as an employee, usually when your employer files
you do
returns,
have-
everybody
you
would
have
have,
tax ID.
you have your tax ID. But what's they're looking to do now is to then make your NIN, your NIN to be your tax identification as well.
Damn.
We may already have before.
Yeah, so there's going to be
So the thing, the actual
So
thing
there's
becomes
gonna be-
redundant.
But I have to.
there'll be it's not redundant. If you have an existing
Okay.
tax ID, that will continue to be your
Okay.
carries on. But ultimately, I think that they're looking to have
Can't they
like
just leave NIN?
a
What's the-
harmonization.
Why do they want that NIN? What's
trying to
the
harmonize
cocoa
it.
So,
inside?
Because so that you
how they running
so that you don't have
So
multiple-
the real goal,
you are you. So let's use your ID as you
Cross-reference.
to
No.
just-
So that NIN that they want to use,
Yeah.
is it that with that NIN they can see Tunji's bank accounts and all that? Is that what they're?
Well,
is that the
But
whole
that was the
idea?
point of the NIN and BVN, no?
Who told you that one?
I thought the whole point was to harmonize.
It's a harmonized identification.
No.
Not bank
your
accounts.
address, your bank accounts, your phone number.
Well, from a tax, I don't know the ultimate goal,
Okay.
but from a tax perspective, it's really to harmonize, create a linkage between your NIN and your tax identification, such that you wouldn't then need to be issued separate,
yeah, okay.
tax ID.
So-
but for you that for those that have tax ID presently,
Yeah.
you will continue to that would continue to be valid.
So with the NIN, BVN, TIN thing, can they really like now go into your account. Let's say you've not like that landlord. Let's say imagine a landlord Otumba now. You know, Otumba looks like a landlord anyway, so like a very harsh landlord. So imagine Otumba, a landlord Otumba now.
Yeah.
Has issued you rent.
Collecting rent for like
And has
3
collected
years.
his Vittori tax. Has told you it's not your business, babe. So now, would they now, and he's not paying tax, would they now go to his bank account? Is this something that
Well,
they
the
can
tax
do
authority can't
under enforcement?
No, they can't simply just go to your bank accounts, which is
they
Because that's what people are
they
saying
can't.
now.
No, but
They
they can't
can't-
simply just no. There needs to be
A procedure.
different
Court order. Court order.
procedures. Yeah.
What are
for me
these procedures?
So if I say okay, let's use Otumba now. So I feel like Otumba. I've looked at the tax records and I see that Otumba. I don't see his name in the tax record.
Following
but
lions everywhere.
I see Otumba is always
I don't earn it. I don't
He's-
earn it.
he's balling. So could it be that it doesn't? How is he
It was a
sustaining this
gift.
lifestyle? So you would have to audit Otumba. You have to write to him that please show evidence that you have paid tax or that you've been paying tax. Otumba will then either show evidence or is unable to show evidence. If he's unable to show evidence, and I can then say I deem based on your lifestyle. I
big
think
boy.
Oh boy, you come
I
on,
think
like
we got
10 M a
Value his
month.
lifestyle.
That kind of
How do
thing.
you place value?
you deem
Check
it.
his car now.
Ah,
It's
you
deemed.
can-
No.
deemed.
What's a deem? I don't understand.
So you
Deem
just
is
look
like
at
Best
him.
of judgment.
You just look at him.
It's like a
yeah.
best of judgment.
As you are like this now. As you are like this now. With this
Like, can you see that?
I think I should take this thing off right now.
Look at your jacket. Maybe you're wearing
I don't want
a
anything.
As you open
Don't
up
want
the jacket, it made it worse.
so by the time they deem the income and
Deeming it. I don't like the word
there's an assessment to say
Vague.
Otumba for maybe the past 3 years,
He's looking Jay-Z-ish.
300 million or something. So either Otumba pays that tax because actually maybe he should have paid more than 300, or he would object, say, look, this is not my.
Can I throw in a
tax.
spanner there?
Okay.
So if assuming you say the 300 million, and I tell you that the 300 million is a gift, right?
No, 300 million is your tax. That's what the tax authority is saying.
So let's say 300 million is my income, right? So what you're questioning is money that is
Inflow.
taxable.
The inflow,
That is
yeah.
taxable, right? And I tell you that 300 million is a gift, right? If you guys recall, there was a session where Taiwo was talking about how if somebody, I'm going controversial, someone patronizes a sex worker and the sex worker gets paid, and that money is taxable. So my question
Who pays
is,
the tax? Are we told?
hold on now. It's an illegal activity taxable.
I don't tell you.
Why are you not serious? Why are you being unserious?
The moment you try to be read, that's when your life is finished because they will drag you.
No, but seriously, but Dels, taxation.
But it's a very important question.
No, it is because taxation doesn't.
My serious people usually.
Taxation doesn't really look at the legality or otherwise of the activity.
Really?
Yes.
So,
if you remember,
an illegal activity?
Al Capone could not be convicted. It was convicted on tax evasion.
Yeah.
So it's not, even though it couldn't be convicted on the drug charges. and all
So
that,
once
it was
you,
taxed.
okay.
So to the extent that I consider you've earned an income,
And gifts are taxable, isn't it?
It's
No,
gift tax.
a gift taxable?
gifts should not. No. I think there might be capital gains on some gifts,
on some
but
gifts, yeah.
on some
Yeah.
on some
Yeah, I see they're
Capital
taxable.
gains and gifts.
So can
Yeah,
someone
depending.
Someone gives you a house.
gift me 300 million and I can justify it?
if it's,
Can we just be gifting ourselves?
then again, there is also the rule in taxation. Say, look, if you're just basically doing things for the sole purpose of avoiding tax, that could potentially be disregarded and seen as being
No,
artificial.
but yeah. So let me ask this question, and this is
But let me just finish
Yeah, okay,
Otumba's
sorry, yeah.
this thing. So essentially, when that assessment then comes, you will then object to say, look, this is not correct. Then you then go through the process and back and forth of, this is my tax. This is not. I mean, this is how much I have actually earned. And the tax authority will then say, oh, maybe they have other information, or to help them get information that is accurate, they can then ask to see your bank statement. So you could potentially maybe provide that, or ultimately maybe they might get some kind of order from the courts that would allow them. So
I'm
then,
going
so
to-
they, so
I'm
they
going
won't
to-
just so
I'm
they
going
won't
to
just
very
go
deep
to your bank and
Yeah.
just.
I'm going to very
So-
deep hole here. So, we have maybe 80 or 100 million bank accounts in Nigeria. So if I even say that,
I don't think it's up to 100 million.
let's even throw 100 million, right? And let's even say, I'm trying to discount it. Let's assume that those are they're duplicates. So every one of us here probably has 2 or 3 bank accounts.
Yeah.
But let's say the true number is actually 40 million people that have bank accounts.
Yeah.
Is the tax authority able to conduct a tax review for 40 million people in this country?
Yeah, that's the point. They won't simply just go reviewing accounts, which is what I just explained.
So
So
there's a threshold.
there needs to there needs to be
There are
there needs
processes.
to be you need to be maybe owing taxes, or
Oh,
there
so
needs
I'm
to be there needs to be some kind of
So-
an assessment
Something to
or
prompt
something
that
would prompt
triggers something.
that would
Yeah.
trigger.
So that's why I asked that.
So they won't just go around
going through everyone's
going
bank
through
accounts.
bank accounts.
That's why I asked the
just
original
because,
question,
yeah.
right? So in this process that you so define now, if they now do an investigation, do their best of judgment, see that you're liable, the right to you decide you don't want to respond, ignore them.
Well, if you don't
Can they now
respond,
go into your account, take that money? That's what I want to know. What sort of enforcement do they have in
that
the new tax law?
power is hardly exercised. It's like a last resort. So if we go through that process, they object. You don't. First of all, if you don't respond, it means that you've agreed technically.
Yeah.
So it means that that's
Respond though.
that's final and conclusive. If that's the case, then you then have to pay. If you don't pay, that's when they can then seek or use that power to look. This tax liability has been established. So we need to get it, and we understand he has money with you.
Yeah.
You know,
Okay.
and they then go maybe through the process of getting a court sanction, which would then
But isn't that what Lagos State was saying, that they can get the money from somewhere else? Isn't that what that
that's
controversy?
but that's after all
Yeah.
that
All
the
process.
process, yeah.
I
So
think
after
it's
all that
because-
process,
Yeah.
they can
Process,
go
yeah.
anywhere else.
Yeah.
Like they can take Arnold's car, for example. Like, Arnold drives an expensive car, Tunji's car.
Potentially, but
Yeah.
they would have
So
gotten
You don't know
some
my
court
car,
order.
so
I wanna ask-
I saw one car. outside.
So I want to ask a question, right? So we're all.
But sorry, let me just even just clarify
Yeah.
Ugo's point. So at the time they write you, you can disagree. You
Yeah.
can also go to court.
Yeah.
There's a tax appeal tribunal.
Yeah.
If you're not satisfied with the judgment there, you could go on to the Federal High Courts, Court of Appeal, and ultimately to the
But I
Supreme
heard
Court.
that.
Before that liability is even established.
Wait, too.
Yeah.
I heard that. I'm trying to get I'm going to look for the article.
Yeah.
I heard that there is a provision in the Tax Act that suggests you can appeal and do all your stuff, but after, I don't know whether it's 30 days, regardless of the length of the appeal, they can take their money. So the burden is on you to go and
Get the
ensure
ruling.
that the ruling or the appeal or whatever is fast tracked. I don't know if that's true.
No,
But-
appeals can take some time, and it's
Yeah, so
clearly
there's-
not 30 days. So
I'm going to look for that stuff,
it's
because I
gonna be
know
interesting.
someone sent it to me. I'm going to
Yeah.
look for it.
So-
And let's be sure.
So I want to ask a question on inheritance tax, right? So we're all over 40 and we all have kids, and I'm sure we are thinking about wills and trusts. I haven't looked up, and I know in certain countries, certain jurisdictions, inheritance tax can be a pain. What does it look like with this reform?
So essentially, your dad has a house.
Yeah.
It passes to you.
Whether in the will or in a trust, does it make a difference if the assets are in a trust and the trust has a beneficiary, and then in someone's passing, the beneficiary now benefits? Is the tax still the same in the trust, or just as an asset lying on its own in my name?
Yeah, if it's in a trust,
Yeah.
because it's not moving, right? It's still owned by the trust.
Yeah.
It's the beneficiary
Yeah.
that
So there's
changes.
no tax
So
on the
there's
trust.
really-
So that's
there's
the
really-
best way to will
So no
an
capital
asset.
gains.
No.
Yeah, basically it's just
But
shares.
no cap, no,
It's not
because
moving,
it's
because the
owned,
beneficiary
it's not
just
moving.
benefits the trust,
Yeah,
not benefit
just
the
benefit-
assets.
Absolutely.
So the trust is the best way to actually pass.
Are you thinking of tax avoidance here? Is that what you're thinking of?
Well, I mean, people use trust.
No. But
Trust
a trust
structures.
is
It appears
actually
that you're asking
very.
tax
A trust
avoidance
is
questions.
a trust supposed to be transparent, essentially.
Yeah.
So the trust in itself
Nobody knows what's That's why you have a trust, though.
is
Nobody knows
supposed to
you
be
have-
transparent.
All right.
But normal asset passing on, if even in for properties,
Yeah.
usually if you inherit a property now, if you
It's almost
don't,
like you have to buy and sell, you have to buy it in a sense. You have
no,
to-
in a
that's the
sense, if you have to
transaction.
transfer
Yeah.
Yeah, the
ownership, from
yeah.
that person
There's
to
a
you,
tax paid.
there's a deemed,
Yeah,
as
so
though,
the best way to move assets is to put it in a trust.
well, people use trust structure. I won't say it's the best. We have to look at the you have to look at the specific circumstance.
Okay.
But I do know that trust structures are structures that generally people adopt.
So let me ask the question everybody is probably thinking. I think that was one of us started with the Donald Trump conversation around when the Hillary was saying he doesn't pay enough tax. He doesn't pay enough tax, and it was like that if you want me to pay more, change the tax code. And I'm not the only one that benefits from this tax code. Her, what do they call it? Her supporters
She just has
benefit.
to bring Trump into
Yeah,
it.
no. I'm just so what I'm saying is it's well established across the world
Mhm.
that especially when you start to acquire some level of income, you also want to be smarter around how you. That's the whole conversation
manage.
around avoidance and
Evasion.
evasion. So avoidance in terms of creating those structured ways. Do you think there are people who are speaking to people like you, or have people come to speak to you, any of them here, about how to properly structure their finances in such a way that they are able to maximize the use of their money?
Sure, absolutely. A lot of individuals, companies, but maybe we should talk about individuals because
Yeah.
I suppose your analysis
Is about
really
individuals,
Yeah, they've been concerned about the.
That was
Oh,
weird.
okay.
Oh, okay. iPad.
Yeah.
Interesting. I was surprised.
No.
Yeah. So yeah, people are definitely concerned. And like he was saying about the trust structure, it's something that some people have already been utilizing, but you see more and more people considering having their putting in place trust structures, whether local trust or offshore trusts. The capital gains one was a big one because some people do have investments, huge investments that they made many years back. And now potentially because the capital gains is now being aligned with income tax. So you could potentially, be paying for individuals if there's a capital gain, potentially up to 25%. So there were considerations around, look, what do I do? How do I manage
So just
this,
saying,
this
there's capital
exposure?
gains above 25%.
No.
No, the rates
potentially-
potentially.
okay.
No, because it's now aligned.
Oh,
So
you
the
mean
income,
to get rates of CG? Okay, got it. Yeah. Okay.
which would be like about 30 for companies,
Yeah.
about 25, potentially about 25 for individuals.
Yeah.
So yeah, there have been those conversations around, what to do. A lot of the changes, we still expect regulations and guidance because if you recall, towards the end of last year, there was a publication that share price would now be indexed to the higher there will be grandfathering rules, and also there's still some clarity to be obtained in that regard. But yes, people.
So does it make sense for individuals of means to be having those conversations, or just wait for the tax authority
absolutely,
to show up?
because tax conversations are
Continue.
becoming more serious. The government is going to have more visibility over taxation. The tax authorities are more interested, they're very keen on expanding tax revenue. As a nation, we're looking to increase our tax to GDP ratio. So there will be tax conversations. So it's very important to ensure that your affairs are properly, managed.
So men of
Because
means like Tunji
men of
need
means
to-
now, maybe when Dels wants to run for your office, for instance,
Yeah.
you would find that, and I'm looking forward to the next election. I think conversations around tax. Yeah, because people are more aware. I don't think we've had this level of awareness, about taxation in
Can I
years.
ask another question on avoidance?
So,
Sorry, before you would get there, I just the conclusion.
Asking about
No,
avoidance?
the conclusion of this line of questioning is two of them are the same question. What would it cost me to engage a tax consultant? And more importantly, how do I know the kind? Because I really, so your firm now, I can't engage your
You
firm.
have to
right?
recapitalize tax
you can.
consultants.
They have to what?
Recapitalize tax consultants.
We're not regulated.
Who is the regulator?
FRC actually somehow.
FRC, please. Let's talk about the capitalization.
And I can.
But the question is, how do you...
even as a business now, tax consultants.
Yeah.
And
the rest. So because the companies seem to know who to go to for their tax conversations. They know the tier 1, they know the tier 2s. But for individuals who want to just structure their tax considerations, especially somebody who is probably self-employed, he has. I'm not self-employed. I have a boss. By the way, he has a shop in Alaba. He's thinking about, but he has means. He can actually engage a tax consultant, but he doesn't know where. How does such a person start?
First of all, I think people have the wrong impression that you cannot engage a Big Four. It's wrong. It's wrong. Yes. No, seriously,
I agree. It's wrong.
No, we do. It's wrong. We do work for individuals. Obviously,
no way.
It's right, men of means.
No,
what kind of
obviously,
individuals now?
if you pass our risk management protocols,
is expensive.
No, it's not. Wait, just wait.
Okay.
No, when I say risk management, it's because you don't want to work with people that have questionable characters. Questionable characters.
Okay.
So once you cross that hurdle, we're more than happy to work with you. And in terms of pricing, it depend on the level of work or advice or
When it's billable power and all that stuff, isn't that the difference?
I mean, that's how we determine what the fee will be, but it's not cast in stone. You can always have conversations around fees.
All right, listen.
But beyond that, there are tier 2 firms, other firms that people can. So generally, I think it's just to maybe get a list. I don't know if we have a.
Is there like a yellow page?
Don't worry, Nairametrics to do that. We'll work on that.
Publish one so that we'll be able to know where we go.
We index that,
and you can then put into different
categories.
I was going to say on tax avoidance, right? Some conversations that insurance company I had last year around CGT, and largely around shares. So if I had a brokerage account,
you have to move the mic closer there.
If I had a brokerage account,
no, him.
Okay,
him.
Yeah. Okay. Mic. Yeah.
So I had a brokerage account with broker A, right? Now, ultimately, those positions have moved. Market was up 50% last year, right? So my question is, what people are trying to do, my avoidance perspective is, you can do what you call an intermember transfer, where you move those shares from broker A to broker B. Now, when broker B receives those shares on day 2, right, he's receiving those shares at today's price. So he doesn't have perspective as to the entry level where he bought those shares. In which case, he can automatically claim that
he just got it.
It's today's purchase, so I cannot pay.
But what does broker A do to the price though?
No, so
don't they give the price at which they gave it to broker B?
No, so at the time when it's a system. So when you move the shares through the system, it goes from broker A to broker B. All that is happening is I'm sending you 100 units of.
But it's still your shares.
It's still my shares. But
does that change?
But broker A does not advise broker B on the date of purchase or the price of purchase. In which case, there's no visibility as to the price I entered and the price it is today. In which case, you cannot hold me for CGT.
So I guess the question then is, who's responsible for? Just to piggyback on that question, so who's responsible for paying CGT? Is it the broker that's meant? I know there's no guidelines here, Tony, but I don't know whether what you guys think about it. right? So is it the broker that's responsible for the burden is on to deduct the CGT, or is it the
individual.
investor?
It's the
So
it's
the
your
individual that
tax.
provide his price, isn't it?
It's your, and that's what I was asking him. It's still your shares, right? So you're only moving from a broker account, from one broker account to the other broker account. Because for determining whether a capital gain has crystallized or otherwise, what you check is what's the cost of disposal and what's the cost of acquisition.
Yeah.
So you acquired at 100.
But so
Yeah,
because I moved it, I have created a mirage, right? So I moved the shares from broker A to broker
You're
B.
still the
So
one that
Well, you
provided
still
the
made the
cost.
purchase.
so I can
report.
basically report that the day I move the shares to broker B is the starting price. Who is going to
Are you leaking a secret to the
So
tax
that-
guys now?
So basically, the 50% increase of last year is basically wiped off my considerations.
I get what you're saying. So it's trying to
Yeah.
get like an uplift on the base cost.
Yeah.
So you're trying to create a new base.
a new base?
A new
Yes.
base.
A new base,
Exactly.
yeah.
Yeah, but the question is, when you dispose, because it's still self-assessment, you should.
What if
States-
I now dispose at a loss? Maybe it was 50 naira when I bought it. It moved to 100 naira, and then I sold it at 98 naira. But I moved it at 100 naira. So is that like a loss?
Exactly.
Yeah, but that movement in itself is nothing. Yeah, like you're just moving from
Actually, that's a good
someone managing.
Sorry.
So it's like
Yes.
so it's like you're moving your funds from maybe GT Bank to Access Bank, right? That's the way the broker thing works.
Really?
How-
so
how
so
does it work?
capital gains is on. I bought an asset. The capital as the price has increased. So the gap between what I bought and the selling price is the tax is on that gain.
Yeah,
Now,
absolutely.
if I move it from broker A, I bought it at it would be broker A. I bought it at 50 naira. Last year saw me move up to 75 naira.
Yeah.
I now moved it at 75 naira to broker B.
You sell at 70.
And by the time you sell,
And then as market is now moving, market now starts dipping, market now dips to 70 naira. I now sell at a loss. Now, mind
When
you,
you actually made 20 naira.
yeah,
I have a
but-
solution for that though, for the tax guys. It's very simple.
The records will show I bought it at 75 naira
and sold at
and I sold at
70.
70.
It's very simple
Yeah.
to solve that. So all that the tax authorities need to do, and I'm really pissed that I'm giving them this.
So they don't know yet.
Yeah,
Wait,
yeah.
stop now. Stop. Tell us later.
I've been gagged. Sorry.
yeah, but really, what should happen is how much have you acquired? So that's movement in itself, because you should. It's a self-report. You should report how much you've
But
acquired.
it's been
Yeah, but you
dishonest.
But if you're now,
Yeah.
so if you are now reporting
At a dishonest
75
price.
as
Yeah.
that,
So you're now hoping
then-
on me to tell the truth.
That's why I said I
Yeah,
know
but
what the answer is.
if
but
it then
let's
comes
leave
out,
that.
because depending on the threshold, really, I know there are thresholds, because if it's below a certain threshold, there's no CGT and
but
all that.
Let's even say you passed that.
So let's say you
threshold.
pass that threshold and you declare that's uplifted, that's uplifted
Base.
base, then you say no tax.
Yeah.
You probably may get away with it, but you should. What the correct thing?
I like you.
The correct thing.
Have you ever were you bought the house?
The correct
No,
thing
no,
is
The
no.
correct thing is to state the amount.
The correct thing, the right
correct
thing to do.
Amount
Yeah.
of the shares.
The right
To
thing.
be
How much
a-
you sold.
and that's what you should do, please.
And that's what you should do.
Do the right
We
thing.
suggest that
Don't-
you do the right
Not giving
thing.
you
Don't
tips on how to,
Think about what Otumba just said. He's just playing devil's advocate.
Yes.
We're not encouraging tax avoidance here. We want to pay our tax, because we talk about tax and GDP ratio here a lot.
Yeah.
Right now, just to also, since we're on this capital gains tax, what exactly is tax? Is it a gain that is 150 million and above, or 150 million and below, or is it the entire proceeds of 150 million?
No. Once the proceed is the trigger.
Yeah.
So once the proceed exceeds the 150 million, then you then have to evaluate whether a gain has
Has happened.
crystallized. Yeah.
Oh,
So even if you sold your shares worth 150 million worth or 200 million worth, you might then find that you didn't even make a gain. But there is a check there is a trigger. If you're less, let me put it this way: if you're less than 150 million, nobody checks anything.
That's in terms of your total transaction.
Yeah.
That's the
value.
size of the transaction or
Yes,
the size of
the
the
proceed.
gain.
Yeah, so it's proceed. No, proceed.
Proceeds.
Proceeds.
Yeah.
The proceeds. So
Total-
your
total
shares, you
proceeds.
sell MTN shares
Okay.
Worth.
150 million,
Okay, got it. Yeah.
for instance. Sorry, can I call it?
Yeah, it's okay.
Yeah. So
I like MTN shares.
Yeah, so that's what will be the trigger. Say 150 million. Okay, let's then check if there's a gain.
Okay.
So if you sold shares worth 200 million, you then say, okay, 200 million, it's within scope. Then you then check it, you then find out, oh, the gain is 10 million or the
Yeah.
gain is 50 million. It's the 10 million or the 50 million that would then be
That
sold.
So if you sell shares now, like some people that maybe their
Men
portfolio
of-
is 5 million or 1 million,
Okay.
they're very upset with this capital gains tax.
Yeah.
Nobody comes.
Nobody
after
comes
them.
after them.
No, because
At all.
it's
100 million, nobody comes
But then
after
the
you.
sad thing is though,
120
if
million,
they're-
nobody comes after you.
Stop,
What if you
stop.
sell in tranches? You do like, maybe you have like a portfolio of 1 billion, you just do
Well,
100 million.
in a year, the threshold talks
Okay, it's
about
in a year.
But the
Yeah,
sad thing
yeah.
is if
Within a
they're
year.
in an equity mutual fund, right? Because the mutual fund gets taxed, they're getting taxed. Right. So if I have $1 million naira in an equity mutual fund, because equity,
Okay, because the fund is aggregating funds
yeah,
from
so
several
they're paying,
people.
you know,
So they would meet the threshold because they are the ones. Yeah.
no.
So
Yeah.
everybody gets taxed then.
Yeah,
Everybody
so
who's within
everybody
that
in the
umbrella.
fund.
Well, they would potentially, because ultimately the gain would then be distributed.
Pari passu.
Yeah, pari passu. So effectively, everybody would have
Okay.
taken their fair
Yeah,
share based on
everybody
their
gets hit. Yeah.
based on their holding.
So-
Di, apologies to put you on the spot.
So all the
right?
people watching, do you see why the world doesn't need more accountants? See how much trouble they are causing.
Ultimately, that's the question.
So Di, sorry, I'm about to put you on the spot, but I think as we're getting deeper into this thing, I'm just going to a rabbit hole. Obviously, your
I think
firm,
Otumba has the wildest ideas.
No. But the truth is that a lot of people are thinking in that direction.
Yeah.
It's conversations that you've seen around. It's
Yeah.
just that this is the first time it's been articulated.
So I'm personally against CG. So now that we've looked at we've broken out this thing deeply.
Yeah.
Right. 150 million is the threshold. So those people don't even qualify. Pension funds don't qualify. I think the last time
What do you mean by don't qualify?
pension funds will not pay CGT.
Okay.
But that's
Right.
what to do.
Asset managers will do, but it says, but the bulk of the market is pension funds, right? I think now they said international investors will not pay CGT.
They won't pay.
No, they will. I don't.
I
Well, I haven't seen anything that exempts them.
There was that consideration. So my question is that the CGT as an issue was one that rallied that riled the market. That probably led to almost $1 trillion of
exits.
market cap wiped out.
Wiped out, yeah.
Right. And I'm saying is that we don't even know what the potential tax revenue would be. Right. I don't think we would make $1 trillion naira from CGT on the stock market. So why destroy $1 trillion
This
of?
is a very daily question, isn't it?
It is. So we're getting
We should bring him on Drinks and Mics.
which is $1 trillion of losses, right? When it's
Everywhere, right?
so you look at apples and oranges and say, you know what, I'm not going to make 500 billion on this thing, right? But I've just wiped out with one announcement $1 trillion of market cap. Is it really worth the effort, right? That's one. And number two is we've looked at other emerging markets, and I don't know, if you've done the work. Markets like Kenya, Pakistan, Bangladesh, who have gone down this path, and a lot of them have reversed or just not gone down this path. What is your broad thinking around CGT as relates to capital markets?
Okay, thank you very much. So for me, I think there's a motivation to try to align normal income tax with capital gains, because there were certain income that's, there were always arguments as to whether it should be CGT or it should be income tax. As you know, CGT was 10%. And normal, your corporation tax was about 30%. So there was a motivation to try to have your transaction be categorized as CGT. So to close that gap, what the tax authority did, what the new law tries to do is to try to harmonize such that, well, it really wouldn't matter whether it's capital gain or income tax. That's what they try to do. And also, as you know, there's a motivation, like I said, to increase, tax to GDP ratio. That said, my personal view is that I don't think we're at that point where we can now, where we needed to do that alignment in the capital markets. I think there should have been some kind of grandfathering for capital markets because, as you know, we are still seeking investments, whether for FDIs or whether it's portfolio investments and all that. So if that's what you're seeking, then you shouldn't then have in place, provisions that would, eventually, inhibit, those kind of investments. And also looking at where we're coming from. We're coming from a position where capital gains on shares was zero at some point. There was no capital gains on share sales until I think about 2020 or 2021, where the Finance Act included shares. Then the rates was 10%, but there were some threshold also. I think it was about 100.
It was never activated.
Was 100 million. Well,
I mean, I don't think people were paying. People were not paying.
Maybe
it.
people weren't paying, but there was. I know some. Yeah, I think we did some work for some foreign huge investor. Then they pay some pay. Let's put it that way. So from 10% potentially then moving to 30, I think it was a bit steep, and that would have. And also on top of that, there was no clarity around how to deal with the FX impact, because you have instances where people have invested. You've invested $1 million when naira was 200 naira, so that's 200 million. Today, your $1 million is potentially 1.4, 1.5 billion, and you're then saying, I should then come and pay, 30% on that gain. I think that may have been, part
what
of
is it now?
Is
it seen as a total return? So it's not a capital gain?
No. So now there are conversations around, what the pricing will be.
It's a total return, right? Yeah.
Grandfathering should be the price will be your price as at 31st December.
You people have said this grandfathering.
So what if I use? What if I use?
Can you explain this grandfather?
What? This is the third time. What's this thing?
He's remembering his grandfather.
Grandfathering is that we'll disregard what your initial pricing will be. We'll then take for certain category.
Who came up with that? People. That just doesn't. It doesn't look like the answer.
So I feel maybe it wasn't the right time, especially considering that we're still seeking investments. We're still in investment mode. President's constantly traveling. There's a lot of signaling that we want to attract capital. We want to attract capital. So I think we could have looked for other mechanisms to to attract capital, but I think they're still going to make some pronouncements in that regard. So I still expect that there will still be some.
All right, let's move to VAT, because there's still a lot of things on our list here I want us to talk about. There's also been some changes with VAT. Could you tell us what are the changes? VAT still remains at 7.5% anyway. What I'm hearing that some people are not expected to charge VAT anymore. So
supermarkets will still charge VAT, right?
Exactly.
Okay, so for VAT, of course, the sharing formula has changed, but that's between federal, states, and local government.
So states get more.
Yeah, so that's that. I think the other change is in terms of what you can now claim as inputs. But I know that can sound very technical. So essentially, when you're producing a product, in producing that product, you incur VAT, right? Or when you buy and sell, you also make payments by your raw materials and all that. And when you sell, you charge VAT. So in the past, there was a limit to what you could claim as inputs. What you could claim as inputs was limited to the VAT that you suffered in producing a new product. But for now, you can. So then, what that meant was that VAT that you've incurred on some other things that were not directly related to that product would not be allowable. But now it's more, should I say, liberalized, so you can claim all your VAT that you've incurred now. There's also been changes around VAT on zero-rated and exempt items. And I know that also creates a bit of confusion amongst people. Say, look, if something is zero-rated, then what's what's the difference between exempt and zero rated? And the simple the simple difference is if it's zero rated, then it means there's still VAT on it, but it's at zero, so you can
Claim.
potentially claim. Unlike if it's
You
exempt.
can claim. How do you mean you can claim?
So so effectively, when somebody then buys that product, because you are selling the product, you would have included VAT. So by the time the person is then making his own filing his own returns, it can reclaim the
Use it
input
as an input.
like a credit essentially,
Okay.
as an input on credit. I think
So, but are they not saying that there are some small businesses that
that are exempt. Yeah, I was getting that.
Okay.
So if you're a small business, that's 100 million and below, you're not required to charge VAT.
So wait. So, supermarket down the road probably does 30 million a year, and a big 100 million. You mean it annually, isn't it? Okay, does 30 million a year. So when I go there to buy bread, they're not meant to charge me VAT. Is that what it means?
So how will I tell them? not to-
Even though,
Yes,
even
how
wait
do you
now,
verify that?
let him
I've
answer
seen
now.
every single receipt that I
Why are
have.
there so many activists here? Wait first. Let's even know what the real thing is. Oh, jeez.
This is gonna cause a riot.
Yeah, so-
VAT.
So, right. So that guy, that supermarket, by this
Restaurants.
law or restaurant that we know their revenue, they no go past 30 million per annum, right?
They know.
So they are not meant to charge VAT. Is that what you're saying?
No, they are not. They don't have.
Mommy
any-
Kola
Even
Day,
though,
yeah,
even
yeah.
though that whatever it is that they are selling in another kind of business is vatable, so they are not meant to
They're
charge
not-
VAT at
yeah.
all.
So 100M revenue and below.
Why did they do that? Though? Is it just is it an incentive?
How do you then judge a business
let me
that
even throw another spanner into that.
Yeah.
Right. A business is a continuum, right? So.
So how do you get to a point where you?
Exactly. So you are saying that for a fact this business is not going to make 30 million. But the truth is, what if I cross 30 million in November? I cross 100 million.
I mean, that's
You
for
start
the tax
charging.
authorities.
What
to know,
happens to
start
all
charging.
the
You're not charging. It's from
sales?
the moment you.
So it's from
It's from the moment you
November
cross.
to
So
December is
so
when
the
you
moment
From
charge.
the moment you cross.
So I then have to update my software to put
No,
in.
you have an account. You-
So what should happen is, once you cross the threshold, you will. Well, the question also is, are you keeping proper records?
yeah, because they'll
so
come
if
and
you're
audit
keeping
you, isn't it?
proper records, yeah, you should. Once you cross the threshold, then you should. begin
That's why
to
it's
comply.
called deemed income. So when they come and
The
it
question
knows
is
that
does-
Tunji
does
supermarket is
even
big, they
does
deem
the,
him.
does the regulator even have the capacity to audit the whole country at this rate?
Well, and
That's
that's why they're trying to focus on
Partner with
the.
that French.
But that's story for
That's why they're trying to focus
day.
on the.
But the
on
point
big
is that
companies. And once you are a small company, they
So
expect
that-
you to
is this
still
not-
file your return. So they have visibility, they have a view, right?
So
So,
this is
the focus will
basically-
not now be on the small companies, will be on the big companies.
yeah. So this is basically them saying, you know what, we just give up on the informal market. So we want
Yeah,
to tax. We want to tax
especially
informal
on
market.
that side, right? If you-
Well, I don't
Yeah,
see it
because
that
most of
way.
these businesses are basically informal.
Yeah, no,
isn't
I
it?
don't see it that way. I see it as them giving an incentive to the small businesses. And also there's a motivation for you to be formal.
But this small
Because
business,
for
they
you
don't
to
charge
say-
VAT before now.
What's the
Yeah,
what's the
I'll-
next
I'll-
one?
Motivation, yeah, why
I'll
should
chal-
I
I'll
inform-
challenge that,
if I'm formula,
But they
I'm
weren't
saying
charging VAT before. Now they now start
everyone's
charging VAT now.
Every single
Now they are
person
charging
is
VAT.
charging VAT.
Before
so-
they did not used to charge.
Every single person.
So because for you
charging VAT.
to be seen as a small business in which your taxes, your corporate tax and everything is zero, right? You need to be seen as a small business. It means that your turnover is not up to 100 million, but you still need to be filing your returns. So the tax
Okay,
authority,
so regardless of how you return.
you still file your returns.
Okay.
So the tax authorities have a view, right? So they don't come. I mean, they can say that you're a small business, so there is no tax to be paid. You're exempt from the tax. So there's a motivation for you to want to be formalized. Because if you're not formal, if you're a business name, for instance, you're still potentially going to be paying tax because you're not in the category of a small company. Maybe because I'm using the term business. So if for a small company is a company that is turnover is less than 100 million,
Yeah.
right? Limited liability company, right? So if you're not, if you're in that category, then there is no tax. So there's a motivation for you to
Move from
formalize
it being a
business name, for instance.
business name to a limited liability
Liability
company,
company.
so that I think the general thing we underestimate is how informal markets really work. Because an informal market generally just means that a lot of the cash will not go into the banking system. So there's no way to even track it. There's no receipts. So like I said, Mama Kolade.
Yeah,
she
but I
sells-
think that changes now with,
Yeah.
the new POS restriction of maximum 1 million. All of those things will change.
How do you mean?
So there's that thing we discussed on the show.
Yeah.
Where as a POS, once you own the POS now, the maximum cash in cash out you can do has been capped because of fraud. Has been capped to about 1 million, I think. So even these businesses that do
Heavy cash transaction.
heavy cash transaction, at some point, cash is going to reduce even in the system. So
But has cash really?
okay.
So cash in the system has it reduced?
No, it's been an all-time high currently.
That's so cash in Nigeria.
All-time high.
It has not reduced anywhere.
5 trillion.
Forget how much we're doing now in digital transactions, but physical cash transactions moving from one place to another as laborers at a site. How do they
Still
get
high.
paid till today? It's still cash. You go to the Aboki down the road. You want to buy something. How do you get paid? Cash. You go to Mama Risi's shop and you want to buy puff puff. How do you pay? Cash. There's still a lot of
I
cash.
actually feel with the proliferation of all these banks that you open with your phone number.
No. It's
Feels like
of course,
everybody-
there has
Yeah, I
been,
mean, they have
everybody has-
different, they have provisions for that as well.
They have
though,
their
yeah.
market. What I'm saying is that if you feel that just because if you move from being either a one-man business or that structure because you want to
So a
avoid
formal
tax,
structure.
you then go to the limited
Formal.
liability company because you believe you're under the threshold of 100 million naira. And I'm saying that most of those people under 100 million naira are so informal in their transactions that you will not even see them to begin with. So there's no incentive at all for them, especially even when they start hearing the tax conversation, which is quite confusing for a lot of
filing
people. So
returns.
there's no incentive for anybody under that 100 million structure to formalize, especially if the person is doing any business at all that can even take the person above income of 10 million a year. Why should I formalize?
Well, it means
And you're not even saying it. I need to file returns every year.
Who has time?
Even myself with my
So-
sophistication, that filing conversation always just, when compliance comes and said we need to file, I'm like,
a lot
file.
of work,
What
yeah.
are you filing? Because I don't even know what they are filing. I'm like,
just engage a tax consultant.
so you see, that's the thing, right? So
It's
me, that's what
KPMG.
I've done because I don't understand this. I've just left that matter. I'm saying the people under the 100 million income threshold. If it is confusing for me, it is confusing for them. Do you get?
Can I ask a
get your point.
philosophical issue? So I don't think it's the right or wrong answer here. We talk about wanting to increase tax GDP from 7% to 15%, right?
It's higher than 7 now.
Yeah, 7. Yeah, so that's 15%. We want to double this, right?
I know that's paid a lot.
Right. That's great in question. Should the approach be that so what I see with this tax act is we're supposed to increase the net
Yeah.
and bringing as more people into that tax.
Yeah.
Right? What
Yeah.
is done is that you've almost sort of excluded a massive part of the
Of the net,
population.
yeah.
And you now said, you know what, we want to kill
The
the guys that are
To
left
pay for the rest.
and choke them out till
Daryl, can we move to? I don't know. We have things to our audience. The next one, please, because we start this one. They'll put you on the spot. Let's go to minimum tax, global minimum tax.
Okay.
Yes, that's another one. There's a 15% global minimum effective tax rate.
Yeah.
What does that mean?
Okay, so what that means is it doesn't apply to everybody, by the way. So
what
it
does
applies to companies that I think if your turnover is up to 750 million.
That's Otumba's range.
not a company.
It's your company's range.
750 million
Tunji's in that bracket too.
Please,
euros. I think euros or dollars, something like that. So what
It's
it
not even
means,
naira, it's euros.
Wow.
No, there's a naira equivalent. I'll find it. But anyways, if you meet the threshold, it means that the expectation is that your minimum tax your effective tax should be about 15%. So when you compute your tax, to get your effective minimum tax, say what's your tax as a function of your PBT. So that once it's
What do
determined,
you make a loss?
Well, PBT,
Because they call it effective minimum.
PBT, profit before tax.
You know, me, I know that one, but in this case, you have to ask that before.
So wait,
Yeah.
so that
But I also wanna ask about
15%
double
is it on
taxation.
global revenue?
Yeah, it should be global
So
revenue.
if you're
because-
like let's say Plotter Wave or a UBA that has a global footprint.
yeah,
So if they calculate your PBT, your taxes based on your current PBT, they will compare it with the global 15% minimum,
yeah.
whichever is higher. Is that basically?
So you expected to meet 15%
Minimum.
minimum.
Yeah. Expected to meet 15%.
Global term.
All right. So if you're somebody who is expanding, maybe you have global operations and you're at that 70, 50 million euros or dollars bracket, like maybe Tunji might reach very soon. So his tax effectively is his tax from his profit compared to his 15% minimum tax, or whichever one is. Like he has to pay at least 15% minimum of his revenue, isn't it?
Yeah,
That's
minimum.
global revenue.
Yeah, 15%. I think I wrote it somewhere. 15% effective tax. So effective tax would be to comparing the tax that you've paid as a function of your PBT. Yeah.
So how
See,
about
tax is so
double
complicated. You gotta
taxation,
always
right?
just have them somewhere.
Yeah,
man.
so
Yeah.
double taxation. There are
And-
people
and
who are
tax
remote
treaties,
workers.
double country tax treaties where probably I do some business in the UK, I do some business in Lagos. I'm expected to pay some level of tax in the UK. I'm not going to pay income on the same revenue twice, am I?
Well, if you're in a treaty country, usually, treaty provisions are they are put in place to avoid double taxation. So if you've paid tax in other jurisdictions, obviously you should get, there should be recognition for the tax that you paid in that jurisdiction.
Okay.
So
But if you're doing business with a country that is no treaty, then you're getting double taxed.
well, ultimately, well, we have to look at
The question is, what are you doing there? But yeah.
essentially what they're trying to do ultimately is to align with the global
As many-
no, there's this global base erosion, profit shifting, some OECD action points that was put in place by the OECD some time ago, which really is to ensure that as a group you have like a minimum effective tax that's you've paid.
But I'm also talking about individuals, right? So there's the remote workers.
Oh no! This
Yeah,
applies
so-
to companies, not individuals. No, it's for companies.
Oh, okay. So, but
Companies
what
within
about
a group,
individuals?
individuals
So,
that are remote workers, right?
I, for instance, I'm working for, let's say hypothetically, I'm working for X, right? But I'm not working for X Nigeria. I'm working for X San Francisco, but I happen to live in Lagos, right? I'm expecting that by the time X is paying me, they're deducting tax at source, right? And in Lagos here, you are seeing money going inside my account and coming out, and you're saying, I saw 500 million pay tax.
Sorry,
Well-
let me add on that question because that's also one of the questions on on the list here. And it's a very important question. And this also is not just somebody who maybe is working for X or whatever, gig workers entirely, freelancers,
Yeah.
and all these guys. How does this all play for them? Right. So if you're a gig worker, you earn money. Maybe you're an influencer or somebody who does a lot of stuff on social media. So Facebook pays you. Meta pays you. YouTube pays you. You probably have a job on Upwork. They pay you as well and all that. Who are you paying tax to?
Lagos. Do you live in Lagos?
Yeah, if you live in Lagos.
Yeah, because tax for individuals is based on residency.
Okay.
So if you live in Lagos, the expectation is that you pay your tax to Lagos State Internal Revenue Service. Then your question would then be, how do you pay it? Because your employer is foreign.
Yeah.
Your employer just pays you. And taxes is self-assessment,
Mm.
like I've said before. So you're supposed to declare your income file your returns and pay your tax.
So that
Now,
okay.
In a circumstance where tax has already been deducted
Mm-hmm.
in
Wherever.
wherever, you would have to would have to see whether you could potentially get credits for the tax that you've suffered in those other jurisdictions. But what you are supposed to do is to file your returns in Nigeria, pay your taxes, and
then hope that you file the return, pay
So
tax.
And hope that you get the money back.
so if
Your
you're
activist in Luxembourg is coming up right
no,
now.
so if you're in a treaty if you're in a treaty country,
Yeah.
obviously it's much
Easier.
and
Easier,
more
yeah.
straightforward. But in a non-treaty country, it might be more tricky. I mean, if you look at like Americans, for instance, for those of them that are working here, and there are a lot of them working here, usually you find that in their home country also they pay tax because they also operate a worldwide tax system. But what you then find is that whatever tax they've paid in Nigeria is applied as a credit
On
to
their
them on their taxes that they paid that they had to pay in
So
America.
so for that
So that's what
It's
I
important to
suppose.
know, will the tax authorities here give as a credit? Especially, okay, let's start from the treaty countries. So let's assume that is a treaty country. I work in
England.
Yeah. And then I live here. It's a global village. It's supposed to be allowed. How do I approach the tax authorities? First of all, I'm probably even thinking, what's my own with you? Nobody pays me here. So why are you having tax conversations?
Because you live
with me?
here, you
But
live
yeah,
here, and
it's
you
in
benefit
infrastructure.
from the
Yeah,
benefits
yeah,
from living in
yeah. No,
Nigeria.
I'm playing devil's advocate for the freelancer who's thinking, what's my own with you? You know. So how does that conversation come into play? Although we've seen some influencers receive tax bills.
Yeah.
And just to add to his piggyback here as well, these influencers or these gig workers, let me use gig workers. So that self-assessment, does it happen once a year or is it monthly that they do it?
Oh, once a year.
Oh, geez, man. So they earn their revenue all through the year, which means they can reinvest it. Well, Arnold pays payee every month. Wow, they sort of have advantage.
No, because
money.
They're supposed to account for it every month.
you're supposed to account for
just
it,
put it
but
aside.
because your filing is done once a month.
Yeah.
But because the employer is not in Nigeria, because what would ordinarily happen is that your employer is supposed to have responsibility for withholding and deducting and remitting the taxes. But in their own circumstance, they're doing, all sorts of things with so you can't really say they have an employer technically. So it's like they're doing their own thing. So it's almost like a sole proprietor, which, for most sole proprietors, what they do is, they pay their taxes at the end of the year.
Wow.
Yeah.
Okay, Tunji asked the question as well.
It's so I think he has answered it. It's a bit.
Are you thinking
confusing.
of being a sole proprietor now?
No. I'm just. So there are a lot of people who do this. So there are people who, for instance, live in, for instance, let's say Canada, but work primarily for a Lagos company, right? Of course, because their salary comes from here, there's a conversation of tax here, then there's a conversation of tax in
You're not meant
Canada.
to tax them here, are you?
Well, because they're not
Anyway.
residents here and their employment, you have to assess, is the employment performed in Nigeria? For them, it's not performed. Their duties, are they performed in Nigeria? No.
What does that mean?
Are they working in Nigeria?
No. Are you working in Nigeria? The duties you're
Yes, but
providing.
they're working for
Yeah,
Nigeria.
so they're working for a Nigerian company.
location.
Where are the duties
Where is it?
Oh, performed in
where's
Canada.
your-
Yes,
Canada,
where the duties performed. So there are different tests that you have to undertake, right?
Yeah.
So, but because the way the system is programmed, and because by the time tax authority comes and sees someone on your payroll, the tax authority expects that
The person is here.
the person is here, so you pay tax. And then if you're in Canada also, well, interestingly, we have a treaty with Canada, so there might be, maybe for those kind of individuals, they should be able to
Or
get...
Canada.
Yeah.
Wow.
We have a treaty with Canada. So you then find that in Canada, they may still have tax obligations in Canada, being residents and citizens of Canada.
This could be more, really.
Potentially.
I don't have a. I really don't have an issue
But
with
then
the
it
tax.
helps that we have a treaty with Canada. So I think for the Canadians that still have Nigerian employment, they may.
So who is a small company by this law? Who is the company that needs to worry about tax? Is it 25 million? Is it 100 million? I mean, CIT.
It's 100
Based on this
million.
law.
It's 100 million. I know. I think there was some
100
discrepancies.
million revenue
Revenue, yeah.
per annum.
Yeah.
So if you make,
So that
if
is
you make less
revenue
than 100
is
million, don't bother
small.
about
Not turnover.
The revenue
turnover.
is
Turnover is turnover now. No. I know your own kind of turnover.
And maybe
That's not
your
own type of
business.
turnover. Not GMV.
Why
That's
is someone-
GMV.
That's
GMV.
Okay.
It's not
flow.
GMV.
GMV.
Yeah, it's not
Yeah.
GMV.
So your
Yeah.
take rate on your
Yeah.
GMV. That's your revenue.
That's your revenue. Yeah. Shubo, don't worry. So 100 million. 100 million.
Yeah.
So if you earn 100 million revenue and below, no tax authority should come and disturb you.
No,
As in
because you're
federal.
you're small company.
You're seen as small company, so you don't. Okay, so what about all these companies? Because I'm also hearing that some people just set up different companies just
what?
to avoid that. Set up different companies, like, you know.
So
just-
let me tell you an interesting story. So I have a friend who was telling me about how he was buying all this expensive brocade, or he wanted to buy a gift for someone in Abuja. So he bought
Gifts are not taxable, by the way. Some gifts.
So he bought this material, expensive material. They delivered it. So the next time he wanted to order, he asked the guy, "Okay, this material will deliver to so place. Should I send the alert to that same account?" The guy said, "Oh God, no, I'll give you a new account." See, that one don't full. So again, small businesses are going to get to a point where you will open 3 or 4 businesses.
Yeah.
Once this one
Once
is full,
reaching the threshold.
you move to the next one.
Yeah. But it's a whole misunderstanding, right? Because they don't realize it doesn't. It doesn't.
It doesn't.
Yeah, if you're 100 million and below, you shouldn't be worried.
doesn't.
About,
Shouldn't be worried.
You really shouldn't be worried about taxes.
What he's saying is-
Corporate income
what-
taxes.
no, what
Doesn't
he's
make
saying is
logic.
that
I mean, it doesn't
if
make-
I
it
know
doesn't
if I
matter to
know
him.
my income is like $1 billion,
Yeah.
Yeah.
So you
Or
potentially do
I open
10 companies.
10
No, but
to
those
11
are big guys.
companies.
But that
And all the
guy
companies
he's
will
talking
not
about,
reach the
is he
threshold.
making, like, maybe,
I mean, it's selling material. Like I said, expensive material.
But you know, all those companies will still have compliance requirements, right?
which one?
Yes. Yes.
I missed
You
that,
still have
sorry.
to file. No, so you
yes.
have 10 companies, right?
Uh-huh.
Yeah.
And
Or
you're
they
trying.
each have to file.
Yeah, they each
Yeah,
still have
I
to
mean-
file.
Yeah, but they-
I'm sure that's worthwhile than paying tax now.
Well, I mean, there are also compliance requirements. You're doing financial statements. You're doing all these things for 10 companies. I mean, if it's a small price to pay, I mean, potentially.
If I give you,
there might be-
if I go to an accountant and give him 10 businesses, I'll get a discount on the service.
You know, I said October has the wildest ideas.
So sorry, somebody just sent me this. I want to come back to this substitution notice thing, right?
Mhm.
And let me read it for the gang here. So the Nigerian Tax Administration Act, which is the NTAA 2025, empowers the Lagos State Internal Revenue Service to direct any person holding money on behalf of or owing money to a taxpayer. Let me go back again.
Yeah.
Any person holding money on behalf of or owing money to a taxpayer who has failed to pay an established final tax liability, which I guess
Final
you point
tax, yeah.
established final tax liability, to remit such money to the service in settlement or partial settlement of the outstanding tax.
Yeah.
The power of substitution is a lawful collection mechanism designed to ensure efficient recovery of unpaid taxes, including personal income tax, capital gains tax, stamp duty, withholding tax, administered by the state. So where a taxpayer fails, neglects, or refuses to settle any established outstanding tax liability when due, LIRS may exercise its power under Section 60 to direct any of the following persons to pay the amount by that taxpayer. So
Yeah.
I guess the key thing that people are, so that established,
Yeah, it has
what
to
does that
be-
mean? Is it that going through that process,
Yeah,
or
it has to have been established.
they've written
because-
you a letter?
Yeah.
Is that what it means?
Yeah, that's what it means. It has to have been established, because if LRS comes and says, Ugo, you're owing 100 million.
I'm not owing, by the way. No.
Yes. Oh, no, you're not owing. But it hasn't been established because you may not necessarily agree. So you have the right to object. Whether you object, by writing back to them, and if they say, okay, no, we don't agree, it's 100 million, you still have the right to go to the TAT, that's a tax appeal tribunal. If you're still not satisfied with the judgment, you can still go to the Federal High Courts, still have the Court of Appeal, and ultimately the Supreme Court before that liability is then established.
Okay, so this is the part now. The notice further stated that affected parties may object in writing to an assessment within 30 days of receiving a substitution notice in line with appeal provisions under the law. While enforcement actions may be taken through substitution, LRS said defaulting taxpayers remain liable for any unpaid balance not recovered and advised them to settle outstanding assessments promptly to avoid penalties.
Yeah.
What the hell?
So even if they say Otumba Ogo is owing, so come and pay the tax. Even Otumba can disagree. You can object that I don't have any
Not by
business
force.
for you. Exactly.
Yeah.
So even though they have the power to seek to recover it from, so even you potentially might, disagree with
Well, I
that.
want to ask.
So what are they but they are saying no.
So within 30 days that he will have to object.
Okay, so also he has 30 days
Yeah.
to object.
Yeah.
What if I've changed address?
or return the money.
So you didn't
or return the
receive it.
money.
What if he has paid? What if
Have you paid? And so you don't
Yeah.
just tell them,
Yeah.
I've paid him back.
No, so
so
in
I don't
America
have
it's
it.
like you have been served.
I don't
Yeah.
have it.
So,
Yeah.
You
So,
know,
but I wanted to ask:
don't
is
get
this
served.
if I didn't get served, don't happens.
is this law? Is this law?
If you
new?
didn't receive
I
it,
didn't
you didn't receive, so you're not aware.
Yeah.
And so they divide to an old address. Somebody collected it, but
And so what's the
need
evidence that
You received
that
it.
you received it?
Just return the money, that's all to the guy. Oh boy, they call me, take your money back. I don't want your wallet. No, that's all.
So because in practice we see instances
Or out of malice, you
where,
just pay
where
it.
the tax authority writes to people, but the time has passed.
Yeah.
Because they didn't receive it, or someone received it and just kept it in their drawer. Well, obviously, for the one that received and kept in his drawer, they received it. But in instances where they haven't received it, you can always write back to the tax authority to say, look, I didn't receive this thing. So,
And there's no evidence that I received it.
yeah, and there's no evidence. So clearly, the 30 days or the period within which you have to respond would have to.
But this law is not new, right?
Which law? The substitution.
Yeah.
No, it's not. It's
Yeah,
in the
because I
existing-
found it very
It's not new.
curious that.
But I think people are now just
In and
now.
around it.
Yeah,
You
because
know,
of all the
very aware.
Finding
yeah.
things that people are.
I found it curious as
Yeah.
in why this. I don't
It's
think
not
this
new.
is
Yeah,
a new.
it's not new.
I have to say, Dio, well done. We're throwing you.
that has done pretty well so far. Honestly, we gotta give it to you. He's done.
You fired.
He held his own. He held his
That's
own.
why he's with KPMG. He's done a good job. Good job.
He
Good job.
likes his stuff, which is strange.
Good job. Good job.
I'm falling asleep right now.
No, but we have to enhance tax revenue in Nigeria, and we have to enhance the awareness.
One of the reasons I stopped ACCA was because of tax. I hated that course. It's all my life.
Well, actually, tax wasn't my best subject I started accounting, and tax wasn't the best, but
No, you love it.
obviously doing it for years, I
Have a
mean,
passion
you have to love it.
So
have
let's
to-
talk free trade zones, right?
Yeah.
Free trade zones. People are also talking about free trade zones, like establishing there and them not paying tax.
So
So
we cannot do business there.
yeah, does this any changes for them, or
Alaro City.
they are still not meant to pay taxes?
So when they sell to the customs territory more than 25% of their outputs to the customs territory, they would pay tax on
The
portion,
excess.
No, the portion that they sell to the customs territory.
Where's custom territory?
Here, anywhere outside the zone.
Okay.
So the zone, technically, anywhere that has been designated a free zone.
It's assumed on export.
Exactly. Export zone, but we say fiscally, that's based on the law, it's outside Nigeria. So Eco Atlantic is outside Nigeria, technically. I believe it has a free zone status. So the expectation is that they export. But of course, that then creates an issue because people have made huge investments based on certain expectations. But I think the issue with the framers of the law, I believe, is that they are then competing with, companies in the customs territory because, you then locate in the zone, we are still selling to the same markets, you're not paying taxes, we are paying taxes. But I think that, if I'm in the zone, I'm not coming out to supply to anyone in the customs territory. I just stay in my zone. People will come to pick goods. Then you shouldn't see me as selling to.
So let's assume
the
that
customs territory.
let's assume that this Eco Atlantic is actually a tax-free zone. That Oka Mall or whatever that is there doesn't mean everything we buy there is.
That's a yes.
To be honest, if
from what you
it's a
described,
free zone,
Yeah.
then they shouldn't charge. They shouldn't charge VAT.
So what if it rents from that
I haven't
place?
checked.
What about rent from there or Airbnb and all that stuff? If you own a property there or you own a flat there, and you're earning
For
income,
any zone that has free zone
Eco Atlantic
status.
a free trade
even though the customer is
I believe they
Arnold.
have free. I'll check.
Arnold is the customer.
Really?
There's
Set up your business
a.
there. So if you set up your
They
business,
have a.
Okay, so let's
legislation.
be. I mean, this might sound funny, but I'm being serious here. Being really serious. Assuming Arnold picks up, someone, right, and goes to the hotel
why me?
in the free trade zone, right?
No need to withhold anymore.
Does he withhold any tax? Like, because the act was committed in that zone. What then happens? It's not taxable. Guys, I'm serious. These are real things, man.
No,
Like,
That's real to who? Real to who?
Okay, so there's a bit. Okay. Speaking seriously, so first of all, all those special economic zones.
Yeah.
There are different types of special economic zones, and some, or let me say, most of them have free zone status. I can't recall for the Eco Atlantic one. I'll check. I suspect
It's a free trade zone.
I suspect that's
Yeah.
So just
I suspect that it has a free zone status.
It does.
Now, for you to operate in a free zone, also you need to be a licensed free zone enterprise, right? Yeah.
So sorry to cut you off. You have all these banks now setting up
Head office.
head offices in Eco Atlantic. Is this a tax move? Is that what you're saying to me?
Well, for banks setting up there, I don't believe that they will.
Because they file from
Be
there.
registered.
They file from the head office, no?
No, I don't necessarily think it's a free because they are not. You need to have a free zone enterprise when you
So I just can't set up a business. In
So
Eco
you
Atlantic
can just.
and
So
then say,
I guess they just have maybe like, I know one of them that is setting up there. Really, it will be maybe to service people in the zone, but then to the extent that you're not a free zone enterprise.
Okay.
Those benefits or that status would not necessarily apply to you.
Okay.
So if you have if you're a free zone enterprise, then you're not federal taxes and all those things shouldn't apply to you.
Okay.
What the law is then saying is that when you sell to the customs territory, if it's 25% and above of what you sell to the customs territory. You sell 25% to the customs territory, then you would pay taxes proportionately. This creates an issue because, people have made investment based on certain assumptions. People have done their financial projections based on certain assumptions, but now it's changing. So I think it can really alter the kind of projections that businesses have had. I also think that if I'm in the zone and I'm not necessarily coming out of the zone to make a supply, I'm just in the zone and Arnold comes to me to purchase. I haven't supplied. Yeah,
in the zone.
Exactly. So
Yeah.
because that's like you going to England to
buy.
buy something. So you wouldn't then ask your shirt maker on Jeremy Street to then say come and pay tax in Nigeria. So
of course.
I think there are some modifications that may still be made in that regard, especially because it alters investments estimation and assumptions and projections. We see the models that some people draw. They draw models up to 2040, 2035. And in all those assumptions, they would have put that no taxes, and all of a sudden, they don't have
Taxes
to
just
model
come in,
in
yeah.
that taxes are coming in. So I think and they've made those investments because of the incentives that they will get. And, we all know the impact that all the zones have. I think Dangote is in the free zone. We know the impact it's had, not just in that environment, even in the country as a whole. The employment it creates. So I think that aspect should be relooked. Personally.
All right, guys, we're almost at the end. We're almost at the 1 hour 90 minutes mark. So last set of questions, or last question basically is, we do this buy sell the whole thing here, where buy is, you like, sell is you don't like, and hold is you're neutral.
Okay.
There's also another rule. There's no buy sell or sell is hold and all that stuff. It's when it comes up with and stuff. So in this particular tax law, right? This there are like 3 of them, I think.
4
or 4 of them, yeah. So, but let's focus on the Nigeria Revenue Service Act or whatever. I think the main tax reform act.
The main one is the Nigerian Tax Act.
So, which of the provisions are you buying? Maybe because you think, man, this is really revolutionary or helps things or whatever. Which one are you selling, and which one are you indifferent about? And it's going to go to everybody as well.
Okay.
By the way.
So you have to know the
Exactly.
So should I start?
Yeah.
Please.
You're the only person.
No. Because of Otumba's ideas, Otumba, you have to also
Rabbit hole. I was just thinking
greatest ideas. Okay, so for me, maybe because I'm an M&A guy, there's a change in the law that now allows companies to, in the circumstance of a merger, you can now transfer your tax assets, tax attributes to the merging entity. What that means, what that means is if you're a company, I'm a company, and we're merging, if you had tax losses, capital allowances that you haven't utilized, we generally refer to them as tax assets because they can be used to reduce your tax payment. In the past, it wasn't clear in the law, right? And the tax authorities they usually not allow you carry it. So if we were to do a merger, now I'm able to offset, let's say, assuming I'm surviving entity. So Diamond and Access had a merger, for instance. Access is the surviving entity. So if Diamond Bank had some tax losses in its own books, Access Bank may not have been able to, utilize those losses. But now that has been addressed. I think that encourages mergers, encourages acquisitions. Because in the past, even for you to merge, if you made an acquisition, for you to merge that entity, it needs to have been related for a certain period for you to get some benefits
from that.
Some benefits.
That's a huge deal, though.
So it's significant for me. I think it's really motivates mergers. So for me, I'll buy that.
Okay.
Sell. I think this free zone thing. I think the concept of free zone, globally, is that, you've designated a particular zone as a free zone or an economic zone. You're trying to motivate investments. Because there are a lot of huge investments that people put into those zones. So to then, in a sense, change the rules or, move the goalpost in the middle of the game, I think, I don't think it's, I'll sell that. Which one is the other one?
Hold here.
Hold.
What are you neutral about?
What am I neutral about? I think the new tax table, I'm kind of neutral. Even though if you earn more, you pay more. Then you're exempting people that earn 800K and below. Fair. But of course, obviously, for people that earn more, they won't be too happy. But I think there's a bit of fairness in that regard. So I'm kind of indifferent about that.
All right, cool. Otumba, are you holding everything? Are you holding everything?
I was going to ask the question that if you had to look at the entire tax reform process, how would you rate it? So from an engagement perspective, I think the only thing that really caused an hoorah was really CGT. But I think overall, as a country, we need to pay more taxes. We need to
Do we need to pay more?
Do we need to pay more?
Taxes?
More people. Yeah. Tax to reform to move the economy forward. You have to pay more taxes, right? Somehow.
More people.
And nothing in this law actually brings in that.
That's what it is. Yes, I think you're trying to say more people
that don't pay taxes.
Right?
Yeah,
Not
that
pay
the
more
focus.
taxes.
The focus
Was
entirely
on the
was
same people
on
who pay tax.
Yes,
taxing
more people
more.
need to pay
On
taxes.
the rich instead of creating
And we can,
No, but I think there's
there's
something that actually brings in more people.
as.
The
Is it a
e-invoice-
core part or is like
No,
a-
the
Invoice.
e-invoicing thing. So
Oh well, yeah, I kind of missed that one.
everyone
What's
is
that one again?
now, required to, like, in raising your invoices, you need to go through some. I mean, we have our technology guys that work on that. But the long and short is that you have to, for your invoice to be validly raised, you have to go through. Okay, maybe you would also need it in your company when you're raising invoices. You have to go through this e-invoicing, like it's like a platform or a model. What that means is that the NRS,
It's one language.
the tax stories, they
It's
have
one language.
yeah.
Where it's
yeah,
everybody has the same template. Is that what you
exactly. I
Okay.
think
But does that
So-
does that enhance inclusion?
So I
No,
must
it does,
buy that
because-
software.
no,
or what?
because
I don't understand.
every vendor, all your vendors now have to. I mean, they can
Go
see all
through
your
that.
vendors,
Yeah.
so they also, will be on the platform. So there is some kind of view on invoices.
All companies, even plus the one that are
well,
below
it
100
was-
I
million.
think it's those people that have
No,
to
if
invoice.
you're not,
Again,
Exactly.
this
So
is-
that's
so
what I'm
this
saying.
thing- so
So
this
it's still for the guys like Tunji.
because
yeah, no,
like
no,
people
but-
like us, we're not affected.
Yeah, but there are people. There are big. I don't know about. So they were testing on large companies. I believe ultimately it's going to be deployed to all.
yeah, but
companies
you see, so
going
those
forward.
big companies you're talking about, this thing is not new. At least not, maybe not in the tax context. So there are some big multinationals that if you are to be a vendor to them, you have to be registered in some sort of way to be a vendor.
Yeah.
There's a registration process, there's a form, So this thing is not entirely new. Now, if you are a vendor that is vending to that kind of a company, you should be
already have things in
formal.
place.
I mean,
Yeah,
you
yeah.
should be formal. No,
You're
no
talking
doubt.
about the guys that
Exactly.
don't,
I'm saying inclusion. I'm saying Mamarisi, Mommy Kolade,
like those guys on the road.
exactly. Those guys have zero incentive, and let's not underestimate how much those guys do in terms of turnover on a day-to-day basis. It might not be your stellar 5-star revenue, but I'm sure some of them cross over that 800,000 annually in terms of income. So my issue with from the beginning is just that I just felt it was a non-issue, is that we did almost nothing to spur inclusion when the issue really with tax in
was
Nigeria
brackets.
is
Yeah.
brackets,
Yeah.
not the people that are already paying. Because the people are already paying 12, 14%, they will pay. You get, they might grumble, but they will pay regardless. What we were trying to do is bring more people so that burden on those little would reduce. But we failed to
All right.
do that.
Last question for you before you go. Then we can just round up. There has been this thing for some years. Even me, as back then, it used to be an argument. When you sell a property, do you pay VAT?
You shouldn't. Why would you pay VAT when you sell a property?
Because that thing has always
It's
been
an
there.
asset.
Like
Why would you?
there's
No,
VAT on
it's
sale
not
of
because
an
it's an
asset.
asset. Because
So if I'm in a real estate business, right? So I'm in a real estate business. I sell houses. That's my job. So I sell a house to Otumba or Tunji or Arnold or even you. Do I have to charge you VAT?
So the VAT has an exemption list,
Mhm.
and in that list, land and building is an exempt item.
So is it now
So-
actually it's an exempt
You guys
item
tax
now?
efficient, man.
Oh.
It's very tax. I'm just saying you're very tax efficient.
No, it's exempt. So to the extent that it's exempt, there shouldn't be VAT. So it's like if you sell pure water, or water. I know there was a decided case on bottled water. Anyway, so water, for instance, is exempt. Now, you cannot have an argument if it's packaged water. But that's technical. But if you're selling if you're selling an item that is exempt, it's from VAT, it's exempt.
Okay.
So whether your
land,
real estate,
properties.
whether it's a personal.
Do we even have the system? So if I go to a grocery store and I buy 10 cartons of water and I buy one juice. It's true now.
No, but usually if an item is exempt, it's been hard coded. It should be hard coded in the system. So
It should be. Ebano, do they hard code it?
No, to be
Because when you
honest,
see that they are long stuff,
so
man.
you know the issue
Or
with
Renee.
you know the issue with the and this is not to cast any aspersion on Ebano, but if you look at the Ebano example, your typical supermarket, let me not zero in on Ebano. You just have a laundry list, and you just then have tax.
And that's
So
Most
you
of us
can't
don't
really
check that
tell
stuff,
what.
man.
Yeah, but if you go look at some of your typical stores in the UK, for some when they list the items, you see the VAT. For baby items, because I remember just last summer, like when you're buying jersey for kids or whatever, because that doesn't have kids. Most kids items don't have VAT. You see the VAT is 0, clearly rated. I mean, clearly stated.
Our receipt
But-
used to be like
but-
that.
but-
So
systems
our
don't-
receipts,
It's
so
at the bottom they used to
so
put it in.
so
They used to
I
put it
can't-
to the side.
exactly. So I can't really tell.
We just
So
assume,
because
assume everything is
exactly. So if
that's it.
it's clearly stated that way, I should be able to go to the accountant and say, oh boy, this thing shouldn't.
So don't tell your guy, we don't want to pay me, they go.
So again,
Yeah.
these are some of the things that bother me in terms of the thoughtfulness of this. The thoughtfulness seemed to be somebody's popping bottles. Godrej just bought a car. That is the thinking. As against there's economic activity happening that we are missing out on as a wide nation. Now, if we want to bring this money in, how do we make it easy for them, one, to be able to bring it in? And how do we also incentivize them for bringing that money in? So those kind of situations whereby you think about the invoicing at checkout positions, where I know and I can clearly see that because of your new tax regime, it's now helping me save money every time I go to the store. It is something that makes me feel more comfortable going to some certain supermarkets. So if I know that this supermarket actually doesn't charge me on some certain items and this one does, this supermarket makes sense for me. I'm saying the thoughtfulness on inclusion was almost zero, if not zero. And for all the stress it has given us, it is the one thing that we asked it for.
But Dayo is not Zach though.
I'm just saying
No,
that.
we'll pass.
No.
on the
I'm
message.
saying
pass
that
the message.
what
Please
we've
do.
Because there's an implementation committee also.
the
so
conversation
Oh, okay,
we've always had about
Good.
Nigeria's tax system is the bracket. We need to widen the tax net.
Yeah.
Yeah.
We've always
that
said
hasn't
that.
happened.
That is the one thing we asked for.
Yeah.
So when they
And
were
it
talking
wasn't
about,
done here
you
at
get.
this rate,
So if
like
it
from what
didn't,
I've seen.
happen,
It didn't happen.
you failed you failed the exam.
All right, guys.
One last question.
One last,
One last
okay.
question. So again, rabbit hole. Sorry, apologies. I'm on this show. I'm a bit excited, but in the US, the IRS, if they chase you for if you well, what's that word you use? It's evade, right?
Evade, yeah.
You can go to jail.
Yeah.
Can you go to jail in Nigeria?
Yeah. Even in the old laws, they've been
It's just
before the
that
new.
we don't know who has gone.
We
wanna
just
go?
yeah, we just yeah. So there are penalties that potentially would include jail terms. Yeah,
Yep.
even in the existing in the legislation before the.
It's never happened before, so I was just curious.
Probably not.
Well,
Not something they've. But
maybe
this
we'll
time around,
begin
it looks
to-
like
yeah.
it's gonna happen.
Yeah.
Anyway, guys, buy, sell, or hold. Tell us what you're buying about this tax law, what you're selling, or what you're holding. I hope that we've been able to demystify, bust some meat, and explain some of the more controversial stuff. If there's anything we didn't touch, let us know in the comment section, and we'll deal with it. Guys, buy, sell, or hold. Dio today.
Yeah, no, you try. Me myself, I feel sorry for you.
So. it's not easy facing the gang. And
He's
you
defending what
can't
he
really. In fact, I don't know, Mr. Taiwo Dele. You can see the way that Dayo has basically like, So I'm sure that you would also give Dayo a lot of thumbs up. All right, guys, that's been Drinks and Mics for this particular episode. Next week is going to be really hot because we have Sam in the studio and
I'm going to
be a battle. It's the full gang next week. The full gang with Sam, of course. Sam is not very happy with Tunji and Anol at the moment. And Otumba is not as well. So Otumba is waiting for Sam. They will have their boxing gloves on. I'm just gonna be refereeing and enjoying the entire scene. So watch out for that episode. All right, thank you so much, Dayo, for being on the show today.
Thanks,
hope to have you here again. We could also talk deals and several other things as well. I mean, we talk a whole lot of stuff. The spectrum here on Drinks and Mics is quite huge. So hope to have you here again.
You
So
should ask him what he does in his spare time. All that thing you do.
oh yeah. I beg your pardon. This is something we do now as well. So what are you doing? Is there any book you're reading? Is there any recreation? Anything that you're doing right now that you want to like share? So someone can learn somewhere.
Well, I play football.
Yeah. Really?
What
Are you an Arsenal fan?
No.
Football, soccer,
Manchester United.
soccer.
Yeah.
Interesting.
What a shame.
I don't even know why I brought that up. Damn. Anyway, okay. So you play football. Okay,
I play
okay.
football. So when I'm not doing
Taxes.
taxes, I tend to play football. Of course, I like to watch as well.
Okay.
I like to travel.
I noticed you are not
Since
too
you just
bad.
want to look at those.
They have
I know he travels a
they
lot.
have a relationship. Yeah. Atiba,
Yeah.
any parting shot for the weekend? For
Stay liquid, though.
Stay liquid. Yeah, though, stay liquid. And also, any parting shot? I know gold is 5K and above. Gold is 5K and above now. So are you still on gold? Are we still buying gold?
I think I am, but it's been acting very strange. But I guess I still am, but it's acting strange. Yeah, it's just trying to figure it out. It's not. It's too straight. So I suspect there's going to be a correction coming soon.
Tunji?
Me, I'm buying our ball. Well, cannot help me.
Never misses a chip log.
We're launching our agent network on the 9th of February in Abuja. If you're in town, please drop by. I'll share the details, but please, it's a big day for considerations around personal pensions in Nigeria. Fantastic time. Yes.
All right. For me, watch out for the Money Fair and Metrics Money Fair. It's coming up in March. I don't think I've even told the gang yet. It's going to be exciting. A lot of drinks, food, games, and the gang's going to be there and several other of our podcast platforms. It's going to be happening at the Landmark sometime in March. Watch out for that. And then also watch out for Trump and Iran. Pay attention. Never know what might happen this weekend.
As well.
You never know. You never really know.
Mm.
There's a lot happening in the market, but we'll deal with all that next week. Today was just dedicated to tax. Until we do this again next time, do have a profitable week ahead. Bye, guys.
Bye. Cheers.
Cheers. This is a good one. Even though your glass is empty already. You tried.
Yeah. Cheers, I know.
Well done, man. You did well.
Thank
This is a
you.
good one.
Thank you.